Welcome, everyone. My name is Patricia Beard. I am the program manager for the Fair Housing Center, and today's going to be an exciting day. It's part of our Fair Housing Month activities, and welcome to Fair Housing, a door to a better community. So if you didn't sign up for that, you'll enjoy it anyways. So welcome. I'd like to also thank our sponsor for the activity today. That it was the Genesee County Bar Association. So thank you so much. We do have three guest speakers today, very exciting speakers with lots of really good topics. As indicated earlier, we will have a question and answer period. So if you would like, please put your questions in the chat. And we do have three test coordinators that are going to be monitoring all the questions, and they will facilitate the question answers with the individual speakers. The test coordinators that are going to be doing that are Ryan Thick, Connie Adelsberg, and Alex Giles. Today, we also have our supervising and attorney for both the landlord tenant and the fair housing department, and that's Sherry Belknap, and she will be fielding questions as well. Many times we get so many questions, and it's nice to have somebody there that can answer some of the questions as we go along. So that would be from Sherry Belknap, our supervising attorney. We do have a staff of one supervising attorney. We have two attorneys. We have three test coordinators, and we have me, the program manager. We do have a 14 county jurisdiction, and I do know that we have several fair housing centers on the call today, which I really appreciate. And we're all here for the same purpose, to change the ways of the community, basically. In our Fair Housing Center, we do systemic investigations. We have attorneys, so we do individual client casework, we do testing, and we do outreach. Next on our agenda, without further ado, let's get on with the show. And I'd like to introduce our first speaker. Our first speaker is Jonathan Jarrett. Jonathan serves as the Vice President Community Development Officer with Choice One Bank, where he's dedicated to empowering individuals and communities through financial education. His work focuses on helping households move from where they are to where they want to be, and connecting small businesses with tools and resources they need to start, sustain, and grow. Jonathan's extensive knowledge about fair housing, gained from his role as a fair housing test coordinator for the Fair Housing Center of Eastern Michigan, and his experience as a community development officer, ensures that he will be well equipped to address the topic of home ownership. Today, he will share valuable insights in his presentation titled Getting and Staying Ready for Home Ownership. Let's welcome Jonathan Jarrett.
Thank you, Trish. That's part of the danger of knowing and having worked with and actually worked under the person who's coordinating and has the mic. That is not what I wrote. But I thank her because she does know me and she was able to add some additional insight. As I look across and was sort of flipping through some of the pages of attendees, I'm like, I see some of my former peers, and it's good to see you all here. Again, yes, Jonathan Jarrett. I am the Community Development Outreach Officer with the State Bank. And as was said, to me, what that really means is I have the privilege of being in the community to try to make impact. I get to serve otherwise those that the bank doesn't stand in line to serve directly and immediately. And I prepare them to get ready to move from, again, where they may be now, closer or to where they choose they want to be. Some of my approach has been biased by my work experience. Prior to being with Choice One Bank, I actually was a test coordinator there at Legal Services. So again, yes, Trish was my boss. Had wonderful experience there. Had opportunity to work under Jill. Hello, Jill. Good to see you. Prior to that, I was with Mott College in workforce and community, or workforce and economic development, I think is what it's now called. And I think I saw Aaron here on the call, and we worked together there. And so I've had opportunity to work in, with, and around nonprofits that touch lives in a way, again, that when I came into banking or came back to banking, this is the only kind of role I wanted. I want to be able to work to make a difference. And hopefully you'll get that from the presentation. So likely on a call and session like this, some of this information for you as an individual is going to be informative, but maybe not as impactful because you are close or at where you want to be, particularly by way of home ownership. So what I'm hopeful is that you would be willing to share the information with those that you touch and or influence. And I'll be sure to put my email. It's going to actually, I'll go ahead and start sharing my presentation. I really don't care to be on screen a whole lot anyway. So I'll go ahead and start sharing the presentation. And you see there my contact information. I have a PowerPoint that's probably, and now that I did this, I can't look at the exact count, but it's probably about 45, 50 slides. You're not going to get through that in 30 minutes. And I know that. So what I'm going to do is I'm going to hit the slides to me that are most important and impactful for a group that I want to impress upon getting home ownership ready. And then from there, again, that's why definitely reach out to me. I'll get you the PowerPoint. You can share it, and we go from there. Is this the one I want? That's not the one I want. Hold on. Let me reshare so that I can control it. There we go. All right. I would probably, and I probably should have retitled this slide, instead of saying, "Are you ready to become a homeowner?" to "Are you ready for the responsibilities that it entails?" Because homeownership absolutely has advantages. And then homeownership absolutely has, now I wouldn't say disadvantages, I would say again, there responsibilities that make it to where I got to get out of my bed on a Saturday morning where I really want to stay in this bed and do ... because it is mine. So yes, an advantage of owning a home is it's yours. You get to decide how you want it customized. You get to decide who your visitors are going to be. You get to decide if you want pets and or, how many. You make sure you're under city codes or whatever. But that's all yours to decide. Now, the responsibility is that it's yours. So maintenance is yours. Repairs are yours. In some cases where, depending on previous experiences, where maybe all utilities were not your responsibilities, all utilities are your responsibilities as a homeowner. So it all, everything about it is yours. Absolutely, there is not an opportunity to build equity depending on where you bought, how you bought, when you bought, what the market is doing. So again, there's even there some understanding that one should have prior or in the process about even choosing the right house for you. So some things to consider when buying a home, when looking at a particular home, you want to look at the age of the house. Is it an older home? Is it a newer home? You know, in here in Genesee County, we have a lot of pockets where, and especially in the city of Flint, where homes were built, 1920s, 1930s. Um, I ended up buying a house that was built in 1950. So whereas I have an all brick house, I also have interior walls that are not drywall. So if and when I decide to update, well, I don't know if I'll actually just ever decide to update the electrical and that kind of thing. I would have to get forced into doing so, and hopefully that'll never happen. But those are things that you would want to consider. What's the age of the home? Today, when I'm looking at it as a potential owner of this home, what's the condition of the home as it is now? You know, amenities accessible to me, and we all, each of us, will value amenities differently. For where I am in life, I don't necessarily need a park across the street or around the corner because I don't have children in my home like that. Location, um, it's again, in this market, not quite the same as others as to commute time back and forth to work. Depending on what type of city you're in, you could be 45 minutes one way, and it really is only 30 miles or so, if that. The neighborhood you select, and that can be a tricky one when we don't always know communities. So do you try to drive by during the day? Do you try to drive by and see what activity is like, around noontime? Do you try to drive by in the evening? Just trying to understand neighborhood. Are there going to be improvements? What is the rate market like currently? And then what is the market? Steps to buying a home. Here are listed 7 steps. I'm going to focus on the first one, the pre-qualification. And when I say so there's a pre-qualification, pre-approval, finding a home, the offer or negotiation, inspection, closing, and then once you get the keys, maintenance. Now, I'm focusing on the pre-qualification because I want to ensure that after the closing, you're able to stay in that home as long as you choose to stay in that home, and you did not put yourself in a position where you've overextended yourself. That's key for me. So the pre-qualification, decide if you're ready to buy a house and figure out what payment you're comfortable with. Make sure you know your credit history. And then the pre-approval, shop around for a mortgage loan. A lender will write a pre-approval letter based on your income, debt to income ratio, credit history, and that. I see pre-qualification as my individual responsibility to do. And what I see often is families and persons leave the pre-qualification up to the lender. I want you to know, because you've basically underwritten the loan yourself, your application yourself. I want you to know that yes, when I bring my packet to you, it's going to get approved because everything is in order. My numbers work out, my debt or my credit history is good. I'm not going to ask you for more than I can afford, that I'm comfortable paying. And to me, that's the key. I would not want the lender dictating to you how much you can afford for a few reasons. One, lenders, when they underwrite the loan, and I'm jumping ahead now here already, and I'm looking at the clock and I'm 12 minutes in. Lenders, when they underwrite, know that they're underwriting using gross income, not net. Now, we all know the difference. Net is actually what you live off of. That's what you actually get deposited into your account every other week. That's what the actual check is written for. That's the money you have available to service your debt. Gross income is not available to you like that. Now, granted, they set the ratios at numbers that might factor in also taxes and that coming out at some point. But the reality also is this, and we'll see this a little bit more later too. They're only giving consideration to what they can see on a credit report. They don't look at any of your other expenses or expenditures, and you need to factor that in. So the finding a house, that's when you'll get with a realtor, and again, the timing of some of this got sort of mixed around and changed. Some of the practices have changed over the last several years, depending on the housing market, what the demand is. Some realtors don't now want to give you a whole lot of attention unless you have that pre-approval letter. Some listings won't let you view the home unless you have a pre-approval letter. So some of that have gotten a little mixed around, but we do have tools today that we didn't have several years ago, with being able to view listings and see pictures and that online. And then you go into the offer and negotiation stage, the inspection. So an inspection is not going to be required by your lender. An appraisal will. So you're going to have an appraisal. You're going to pay for that. That's going to be part of the process that the lender goes through as they're underwriting the loan. The inspection is not going to be required, but it is recommended. I see that as an investment, as an insurance policy to a measure. You can gain a better sense of what you are looking at past what you're looking at. What do I mean by that? That inspector is going to go into the attic and take a look at what the deck boards look like up under the roof that you see on the outside. They're going to go in the basement and look at the walls to see, if the foundation is doing anything funny. They're going to go into the crawl space. So they're going to do some of those things and be able to provide for you a report that either may help you decide this might not be the one for me because there are some issues here, or provide some leverage in the negotiation process. And so then we got the closing, and Again, another reason why you want to know that you're ready is because closings can take you by surprise. What do I mean by that? You had your 3% down, so I got my you know my six, well, in today's market, I got my $6,000 on my $200,000 house. Okay, but now you have prepaid taxes, you got insurance, you got other fees that, yes, they told you about at the time where you applied for the loan, but now it's real. You have to have the money to apply there. And then again, once you get those keys, probably at minimum, you're going to want to paint walls. So you're going to need not even just a couple of $100, a few $1,000s to go out to Home Depot and buy paint and buy temporary blinds. And then you got to buy, your new dish racks for your drawers to put your knives and your spoons and your forks in and all that kind of stuff. New trash pails for your bathrooms. So it's just a lot of stuff that adds up quick. And you don't want to necessarily get the house and now you're charging stuff on a credit card. That is not the way that I would hope that we would go. And then we talked about maintenance. So these are some of the different companies that you can do, or types of organizations that provide mortgages: banks, credit unions, mortgage lenders. You can do them online. You can use mortgage brokers. This is the one thing that I will say here. I'm not going to necessarily talk bad about an online process, but I do feel like dealing with someone directly, face to face, you can establish rapport such that you gain an advocate in that person, and they can work definitely on your behalf as the go-between you and the underwriter, as well as you and the processors and all. So I would encourage, either the bank or the credit union, and even, bank, credit union, mortgage lenders, and even brokers, because you'll be able to have that one-on-one, face-to-face type of contact. So these are some of the documents that one would want to begin to gather and know where to go in order to get them and to be able to update them. Going to need your income statements, which are basically pay stubs. You're going to need bank statements for the financial institutions that you bank with, for the financial institutions that you have services with, should I say. Investment accounts. So, stock portfolios and that type of thing. 401k statements, most recent. You're going to want your last 2 years tax returns with all of the schedules and your W-2s if you are employed. And then they're going to ask also for ID. So I don't know if anyone's really ever, you've probably heard of the 4 C's of credit. I tend to not like to use the word credit in there, just because it can get redundant. I say the 4 C's of consideration that lenders use. Now, you'll notice that 2 of them are sort of paired together and the other 2 are paired together. And I did that intentionally. And I did it for this reason. When you talk about, for example, a credit card application, A credit card application is not going to give consideration to capital or collateral. Every request that's made for any type of credit, they're always going to give consideration to your character, which is your credit report, and your capacity, your ability. Can you afford to make this payment? Do you have income coming in order to service the debt? Capital and collateral tend to go towards loans that have some type of one collateral. And depending on the type of loan and the length of the loan, they may look at collateral. And that's how much money you have in accounts that also could service the debt if something came up. So with the credit report, they're looking at payment history. They're sort of looking at limits versus balances, particularly on revolving accounts. And they're looking at how long one has been in the trades. So again, if we were sort of to go back to this slide, the credit report, again, is the character. Employment history. How long have you been, how long have you been on the job? Are you new to the job? If you're new to the job, what was the previous employee? Were there gaps there? And that is a function of capacity. So too is income. Assets here, income and assets, the assets speak to collateral or to capital. The debt to income ratio also speaks to capacity. And the down payment is going to speak to a little bit of both capital and collateral, because it's going to impact the loan to value ratio. Credit scores. Typically, when I talk about credit, I'll say this. I do a lot of analogies, and in that I view credit and my credit report as sort of like a high school transcript, right? So, every class I took in high school, ninth grade, 10th, 11th, 12th grade, by semester, the class is listed by title, and I got a grade. So when you look at my transcript, you can see the full history. Well, in today's world, we like shortcuts. So just like on my high school transcript, there's a shortcut. There's a cumulative GPA. Now, what we like to do now is look at the cumulative GPA. But let's say in the second semester, or the coming out of the Christmas break, going into the third marking period, something traumatic happened in my household that made it difficult for me, one, to get to school and focus when I got there. So I was more A's than B's my first two marking periods. And then even after that period, I was more A's and B's the rest of the way. But I had that one thing, and we all know that once it goes down, it's hard to get it back up. Well, if all we're looking at is my GPA suffered, and now I got a 2.9, where otherwise, if I held to pattern, I probably would have been closer to 3.4, 3.6. This also is where having that relationship with the advocate can help. Because I sit down with that loan processor. I say, hey, when you pull my credit, this is what you're going to see. This is documentation to support what happened so that when the underwriter gets it, and it might be close to the line, because nowadays it's, we have a cutoff. So if the cutoff is 660, anything above 660, either automatic approval or continue underwriting. Anything below 660, no, it's a denial. Well, if I'm close and that underwriter has been told, maybe they will now take out my transcript and actually look at it and begin to understand who I am, better understand who I am and what I'm dealing with, especially in an isolated incident. So, these are sort of scores that they say, 580 or lower, 20% of US consumers, 580 to 640, credit scores below the average. Some lenders will approve loans with this score, but you're going to probably have to be at the higher end even of that range. The 640 to 720, slightly above average. Most lenders consider this good credit score. Now, what I will say, and I got 7 minutes to say it. All right. I personally, subscribe to the belief that if a person can get to 720, their life changes. Their life changes. They get better opportunities, better offers. They get offers instead of having to ask for things. But the danger there is this: there's discipline that's required differently once you get to those levels, because you'll have to say no to things that will be offered that you'll have to determine, but this is not anything I need right now. So there is a level of discipline required differently as you ascend in credit score ranks. So this slide here talks about how the score itself is derived. 30% of your score is your actual payment history, or 35, I'm sorry. 30 is based on what you owe. Now, they call that utilization. 30 is the magic number because you want to keep your utilization or your outstanding balance based in relation to what you have available to you. Let me give you an example. If across your credit cards, you have $10,000 available, you don't want to go above $3,000 outstanding, because that's where it's going to begin to negatively impact your score. New credit is 10%. Credit types of credit is 10%, and length of credit is 15. This is why, or this is where, when I started talking about debt ratios, it gets, what is that doing? It gets tricky, because what some loan programs will do is they will allow for approval based on what they call the front end debt to income ratio. And in that, the only thing that's considered is the principal and interest on the loan being requested. They're not even factoring in taxes and insurance. And for anyone who's purchased a home, we know first 5-6 years, every year your mortgage is changing. Not your principal and interest portion, but your taxes and insurance. And it's not going down. That's why, again, I say you have to know what you're comfortable paying. And then the back end is where they include other debts that show on the credit report. But again, this is all based on gross, not net income. Let me let me jump to here. Typically, when I do a class, this is part of a discussion on budgeting. I wanted to include it here because I wanted to illustrate some examples of other type of expenses and expenditures that are not going to show up on the report. So an underwriter is not going to factor in, but they're real in my household. Car insurance, that's not going to show up on a credit report. But in the state of Michigan, if I have a car, I got to be legal. The payment, if I have a car payment, it will show on the credit report. My cell phone bill, it's not going to show necessarily on the credit report. But depending on how many in my household, that could be a couple of hundred, a few $100s a month. You know, shopping or clothing, not on the credit report, but something that, depending on who I am and how active I am around that, it can be a monthly expenditure. Habits. Now, we all have them. And for many of us, our habit has a financial obligation to it. Now, I'm not saying it's a good one or a bad one or anything like that, but we have to factor in if my habit is coffee and I'm at Starbucks, you know, every day, I need to factor that 100 to, almost $150 in for my habit. Entertainment. Now, this is what I'll tell a class that I'm doing with financial literacy. I don't subscribe that anyone should work, and work some more and have no outlets. But what I will say is everything in moderation. So we're gonna need forms of entertainment, but make sure they fit within a financial way that's appropriate for where you are in life. Grocery, not on the credit report, but it's going to cost us. We don't always, account for or medications and that personal grooming. The nails, haircuts, shaves, what have you. That has to be considered. Again, restaurants, rent, just some things that in creating our own just even budget, just something to think about. When we do a budget, list those things. This is going to be part of that. This is going to be part of the pre-qualification I do of myself. Now, how did I get these numbers? I've looked at my bank statements to see how I'm using money. I've looked at credit card statements to see how I've used money. I'm gathering all of that information so that I can account for it. And then that same debt to income ratio, I'm going to take the total of all of this and then divide it by or compare it to, you don't necessarily have to do a division, just compare it to what you're bringing home. Am I plus or minus or equal? Equal can be okay, but that might be an indicator that today is not my day to buy a house. I may need to take a look at this budget and see where I can make some adjustments. That is literally where I wanted to stop. And the rest of this stuff, you can sort of look through as time permits for you. And I'm 1 minute over, Trish. And that was hard for me. 30 minutes.
I know it's hard for all of our speakers. They're going to have that. Maybe next year we'll have you back in either a live presentation and or another virtual and we'll make our sessions longer. But I appreciate you, Jonathan, and I
Mhm.
appreciate all the information. And I'm going to turn it over to Ryan Thick because he is going to field the questions for you.
Hi, everybody. Nice to meet you, Jonathan.
Hello, hello.
Heard such great things about you, so it's nice to meet you. So I'll
Yes.
start asking some of the questions that were in the chat. So the first question is, as someone who's owned a home for about 4.5 years, what things should I consider financially in terms of using my home equity and regarding fair housing protections before purchasing another house?
Um, use the use of home equity. Um, I personally think that should be something that's done strategically. It's one thing to have a line available to you and just be able to use it whenever. That's good. But am I used because once I've accessed the funds until I pay it down, they're not available to me again. So in accessing the funds, am I doing it in a way that is truly adding value or benefit to me and my household? Because um again, and this is one thing that I also say and share. I believe there needs to be a shift in the way we view credit and identify credit as a tool and not a way of life. So when this line of credit is being used as a tool that adds value to whatever the goal of the household is, wonderful. Now, as it relates to purchasing, is it purchasing a secondary home or is it moving from the home that one is currently in and relocating or what? Do we know? And I asked because like for myself, my wife and I bought our home in 2020. We got an interest rate I'm not trying to lose. I'm I'm not trying to lose the interest rate I have. So for us to buy a home, it would truly have to be a life-changing experience that almost requires us to have to leave here because I don't want to lose this loan, especially to buy at what they are now. Don't want to lose it, and values are higher. No, thank you. So it really all depends on what they're doing. Now, if they're talking about doing an investment property, um, there are some like Dave Ramsey that says only buy an investment property if you can pay cash because you just really don't know how it's going to perform when you're having to utilize debt to acquire it.
Okay.
Did I?
Thank you. That
And
was helpful. Thank you,
okay,
Jonathan.
yeah, I was wondering if I at least addressed
Yes,
everything. I might not have answered it, but I at least addressed it.
thank you.
Okay.
Thank you, Jonathan. So,
Mm-hmm.
some buyers think it's a good idea to skip the middleman and buy a house from a seller directly under a quit claim deed with no title search. Can you discuss the significant risks of doing this?
Um, I and you brought up the part that I absolutely would say you cannot avoid. Okay, if you decide to buy from a seller direct, I don't believe there's any scenario where you should not go through the title search towards doing the closing with that company. It's not worth. It's too much stuff that could have happened before the person that you believe currently owns the home even got the home. It's just too much that could come up later. I would not in any scenario advise that.
Okay, thank you. So the credit limit versus credit balances issue is a bit confusing. Is it better to have a high credit limit, but you've only used a little of it, meaning that you don't owe a lot, but could be in a lot more debt later? Or is it better to have lower credit limits, but have the balance be close to that limit, meaning you owe money, but probably won't take on more debt?
It's better to have the utilization be low. So to have a higher balance or to have a higher limit, but a lower balance. And again, that's where it's a very similar scenario where I was saying once you get to that 720 and things begin to get offered to you, there's a different type of discipline that's required. Because I really hope and wish that more of us got the lesson out of our struggles. What do I mean by that? At a point where I was having some credit difficulties, it created for me a discipline where I just can't go borrow. So I have to wait. I have to learn the discipline. Well, that I learned the lesson such that now when I'm in a position where within reason I can go anywhere I want and sign my name to something and walk out with it, I know I've disciplined myself better. So yes, you may have $15,000 available to you in total credit, but that doesn't mean you have to use it, nor should you use it necessarily. But if you only had $1,500 available and you're using 1,000 of it, that is certainly going to impact your credit score.
Thank you. So when lenders automatically increase credit limits, does it affect my credit score if I ask them to decrease that limit again?
When they automatically increase it, it does not impact your score because they did not do, if they did it without you asking, they didn't do what they call a hard pull. They just assessed your history and said, this person is of quality. We want to keep them. Let's provide for them more if they choose to use it. Now, if you call them back and say, no, decrease it back down to where it was, that won't necessarily impact your score either. Again, unless you're above the 30% utilization, which I'm assuming you weren't at the time that any of that started.
Thank you. In what ways does the Community Reinvestment Act complement the Fair Housing Act? Do the CRA and Fair Housing Act tend to help similar communities?
Yes. I would say the CRA has more focus and emphasis on household income and yeah, I would say it has more impact on the financial side than some of the other protected classes where fair housing are focused. It's more of a financial focus than the status, and it's also the focus is to provide more education and training than again the fair lending does.
Thank you. Can you talk a little bit about first-time buyer opportunities?
Yes. I would say a lot of financial institutions have programs for first-time home buyers. There actually is one now through the Federal Home Loan Bank of Indianapolis, where dependent on the applicant and application, there's opportunity for up to 100, or not 100, I'm sorry, $20,000, up to $20,000 in down payment assistance. And I should have brought that flyer. But yes, a lot of the banks and that financial institutions in our community has some type of offering, either through the bank itself or with some related program or institution available.
Thank you. What are the advantages or disadvantages to a conventional or FHA loan?
Now you're getting into an area where I'm not as comfortable. So I'm going to, in this case, maybe ask that person reach towards me so that I can connect them with one of our mortgage loan officers, and they provide more detail on the pros and cons of each program. I just don't want to provide information in this format that's not what I would feel to be the best.
I have one more question, unless there's more that people have. How do you promote fair housing laws at the federal, state, or local level in your current role?
In my role, I don't do as much with it, but we do have fair lending as a department at the bank, and they work more so with our lenders and following up on applications, and they do a lot of that hum to work there. But I don't work as directly with a lot of what I do is the educational component in preparation to be able to hand off this this household now to the lender of their choice. Hopefully it'll be choice one, but even if not, as long, for me, I feel as long as I provided information that helped them, make the best decision for you and your family from there.
Okay, thank you. Those are all the questions I have, unless anybody else has any more. I know it's 10 o'clock, so I don't know.
Right. Jonathan, really like to thank you, and I'd like to thank you too, Ryan. Great job fielding questions. Jonathan, I'd have two very quick things before we go on to our next speaker. If you send me the flyer for the home buyers, the first-time home buyers, I will make sure everybody that is in the room will get a copy of that. And then also we had a couple questions about, can they get a copy of your presentation?
Absolutely. And they can just email me for that. And I would prefer that they email me so that I can account for the number of persons back to my boss that had interest enough to say, hey, can I get a copy?
All right. So if you'd like to do that, Ryan, could you put the contact information in again in the chat? And so for the first-time home buyer flyers, if anybody would like that, you can go ahead and or a copy of the presentation, please contact Jonathan directly. And again, Jonathan, I miss you. Wish you were still with us, but I know you're doing a lot of great things there. And I really appreciate you and appreciate the work you do in the community.
Hey, did you put up the cats?
No, I have a cat that is constantly in the way when we have these things, and so
I haven't
everybody
seen them.
knows. No, he's somewhere else, and then
Okay.
the other one is laying underneath my desk on a heated blanket, and so yes, my cat. I think that the people look more forward to my Draco Star cat than they do me actually, and they do put a smile. Thank you, Jonathan. I appreciate you. All right, moving right along. And I like
Theo's
all
got
the,
his cat on.
oh, there, Theo's got his. Mine's black and white too, but he's down here sleeping. There's no way he's going to move from that heated blanket. Um, all right, moving right along. I'd like to introduce our next speaker. And our next speaker is Stephen Sheldon, a seasoned attorney with over 20 years of legal experience. He currently serves as a staff attorney at Legal Services of Eastern Michigan, where he specializes in litigating fair housing and landlord-tenant cases in state and federal courts, as well as through HUD and Michigan Department of Civil Rights. His extensive experience and deep understanding of housing and civil rights issues makes him highly respected figure in our legal community. Today, he will present a critical, newly enacted law of utmost importance and urgency in our legal landscape, Michigan's source of income discrimination law. Please welcome Stephen Sheldon.
Oh, well, thank you, Trish. That was quite the introduction. Back when I was single, I used to always, um, you know, tell women the same thing on a first date that I'm going to tell you guys, which is, after that introduction, lower your expectations because I don't know that I can live up to them. But I'm going to try here. So hopefully I'm sharing the correct screen. Looks like I am. So I'm going to be talking today about Michigan's source of income discrimination law. This is a new law and it's got some complexity to it. And surprisingly, I'm finding a lot of landlords don't yet know about it. A lot of property managers apparently don't yet know about it, which is unfortunate because that's kind of their job and they're going to find themselves in a little bit of liability based on the complaints I've already gotten since this law went into effect. But before we get into all of that, we probably need to do the always popular disclaimers. So, because you know how those lawyers are, right? Hate those guys. So this is a presentation that is for educational purposes only. It is not legal advice. Legal advice would require specialized knowledge of the facts in your particular case, which I don't have. So please be aware that attending or asking questions does not create an attorney-client relationship, and you can't go to somebody and say, Attorney Shelton told me to do this thing, because I'm not telling you to do anything. So let's talk about this new law. It has arisen for a number of very important reasons. And by the way, there's a lot to cover here, and I've got a short time, so I'm going to probably go a little quicker than I would normally want to go. And I'm going to be very general. There are sometimes maybe some specifics that don't apply to the generalities, but I'm going to be very general about what I'm talking about. So this new law has arisen for a number of different reasons. The number one reason, of course, is that Michigan has a serious housing shortage. And as would shock nobody, people with low incomes are the hardest hit. They seem to be the hardest hit anytime we have some kind of a problem. Right now, at last count, there were 58,000 Michigan families that rely on federal vouchers. That's 58,000 that are on vouchers. There are 85,000 on waiting lists. And this is the most recent information I could find. It's from last year, right about the time that MISHDA started closing their waiting lists. So this number is probably higher. And once you do get on the waiting list, you typically have over a 2-year wait before you can actually get housing. And again, that wait is probably longer now. And of course, it's not getting any better. This is just from a couple of weeks ago. Going to start losing more housing vouchers. Wait lists, if they are even open, will be even longer. So part of the problem with wait lists is why they're so long is that many landlords simply refuse to accept vouchers, historically speaking. And when people have no place to live, they become unhoused. And of course, the number of people without a place to live, the number of people who are homeless rises. And then to make things worse, when people have limited means do find housing, they're often vulnerable to exploitation. And we see this with unscrupulous landlords renting unsafe housing that's not fit for human habitation. And people will move into those houses out of desperation. I have literally seen during my career cases where a landlord, and more than one, by the way, where a landlord would literally pull a condemned sign off of the front door as he's bringing tenants in to show them the house that he's planning to rent them. And even when a person does get a housing choice voucher or they get some other form of assistance, some landlords will insist that the tenant pay more than what their share of the rent is supposed to be. And many tenants, again, are so scared or desperate they'll just go along with it. Even though it's illegal, they will go along with it because they don't want to be on the street. And of course, we all know about the landlords who will accept some other form of payment, wink, wink, if the rent gets behind. And there are as many ways to exploit and abuse tenants as there are people in the world who can come up with them. Many types of exploitation and abuse used by landlords to victimize tenants who are in danger of becoming homeless. So for all of these reasons, we have this new law that's intended to help make more housing available to people who have vouchers. So this is a brand new law. It only went into effect April 2nd, so it hasn't even been in effect for an entire month yet. What it does is that it amends two existing statutes, the Elliott-Larsen Civil Rights Act and the Landlord-Tenant Act. It explicitly says housing is a civil right. And this is important because that means it allows people who have been discriminated against in housing because of their source of income to actually sue for damages. And it establishes source of income as a protected class. It looks like most of the people who are here are familiar with how fair housing works. So I don't think I have to spend a whole lot of time explaining what protected classes are, but source of income in the state of Michigan now joins age, race, religion, color, national origin, and all the other protected sources, protected classes that come from the Fair Housing Act and from the Elliott-Larsen Civil Rights Act. Now, it only applies to residential properties, so it doesn't apply to real estate sales or to commercial properties. And although it's a bit broader in scope, its main intention is to prevent discrimination against people who are receiving government assistance, with the intent, as I said, to reduce some of those wait lists, to make more housing available to people who have a voucher so that those wait lists go down and that those wait times shrink from over 2 years down to something that's actually reasonable. Now, this is a state law. It's not a federal law. So the law I'm talking about today only applies in the state of Michigan. It is worth mentioning that there are 23 other states that do have some form of source of income anti-discrimination laws on their books. Those laws vary greatly in what they cover and who they cover and how they operate. So this may or may not apply to people who are zooming in from other states. It's also worth mentioning that 16 cities and municipalities in the state of Michigan already have their own source of income ordinances. But again, these ordinances vary greatly. They may offer more protection than this new state law. They may offer less protection, but it's worth mentioning that they are there. So let's talk a little bit about who has to follow this law. This law applies to all landlords who have 5 or more rental units. So in general, if you have more than 4 units that you are renting out, the law applies to you. Interestingly enough, the statute also includes property managers and property management companies in the definition of landlord. So if a person only owns 1 rental unit, but they've hired a management company and that management company manages at least 5 rental units, then the law applies. So it's pretty much going to apply to almost all property management companies, because if you're not renting at least 5 rental units, you probably don't have much of a property management company, right? It also includes entities that are related to these landlords. And it very helpfully defines what it means by a related entity. A person that directly or indirectly controls, is controlled by, or is under common control with another person, which is fantastic because that is completely clear, right? Everybody knows exactly what that means just from reading it. Okay, maybe not. So what exactly does that mean? Well, what it means is that it includes owners of rental properties, and it also includes companies that own a company and that actively exert some kind of control over that rental property. So basically, this is to prevent owners from hiding behind shell corporations to avoid liability. So let me give you an example. Let's say Slumlords LLC owns Nastiole Apartments, Inc. And Nastiole Apartments, Inc. owns Nastiole Apartments, which is an apartment building that turns out has discriminated against a person because they have a housing choice voucher. And Slumlords LLC sets policies that Nastiole Apartments, Inc. has to follow. That being the case, Slumlord LLC and Nasty Old Apartments Inc. are both on the hook for the violation by Nasty Old Apartments because they are related entities. And if Slumlords LLC hires Terrible Management Inc. to manage Nasty Old Apartments, then Slumlords LLC and Terrible Management Inc. are both on the hook for violations by Nasty Old Apartments and Terrible Management Inc. Why? Because companies contracted to manage rental properties are included as related entities. And all of the employees of Slumlords LLC and Nasty Old Apartments Inc. and Terrible Management Inc. are also going to be liable for any violations in which they are involved, because these are employees and they are under control of another person. So that's who has to follow the law. Who does it protect? Well, as you might guess, it protects residential tenants. It only protects, this particular law only protects on the basis of their legal source of income. So it, as I said, does not apply to commercial leases, and it does not apply to real estate sales because, again, it's only for residential properties, and it's only for rental properties. So what do we mean when we say source of income? It sounds easy to understand, but it's a little bit more complex, right? So it's, again, very, very helpfully defined by the statute. Source of income includes, this is not limited to, but it includes benefits or subsidy programs, including housing assistance, housing choice vouchers provided under 42 USC 1437F, public assistance, veterans benefits, Social Security, supplemental security income, or other retirement programs, and any other programs administered by any federal, state, local, or nonprofit entity. Again, not entirely clear, right? So what does this mean? Well, first of all, it applies to all legal sources of income. So if you have a source of income that is legal, the landlord cannot discriminate against you based on your source of income. So for instance, a landlord does not have to count the tenant's income as a mob enforcer, right? If you're going out and whacking people for, Big Johnny the hook, the landlord does not have to include that as part of your income. However, the landlord does have to count a tenant's income as a porn star, even if the landlord disapproves of pornography, because it is a legal source of income, right? But it's not just those sources of income. It also includes all forms of public assistance related to housing. So if you are receiving a housing choice voucher, if you are on Section 8, that has to be included as your income by the landlord. Veterans benefits have to be included. Social Security disability, Social Security supplemental income has to be included. And any other kind of government or even nonprofit funded assistance has to be included as income by the landlord. It was surprising to me and pleasantly surprising to me that the legislature chose to include non-government nonprofits, because that is often an important source of support for people. There are, of course, some statutory exceptions to this. A big one is that a landlord does not have to count income that a prospective tenant cannot demonstrate is derived from sources and activities permitted by law and is provided on an ongoing basis. So again, we kind of have to parse this because it's written in legalese, right? What it means is if a tenant can't show pay stubs, they can't show bank records, they can't show anything that says, yes, this actually is my regular source of income and it's legal, the landlord does not have to count that income. This, of course, creates some problems sometimes for people who are self-employed, right? Because a lot of times they won't have a pay stub. They won't have anything like that. So one way that a person that's self-employed could maybe meet this requirement is to show bank records or ledgers or maybe tax forms showing their regular income. There's no specific requirement for how a person can demonstrate the source of their income, but it does have to be reliable. They do have to show that they do get this on a regular basis. There's another exception for housing assistance not approved by the appropriate agency within 30 days after the landlord provides all information required as a condition of the agency's approval, including evidence that all repairs required for occupancy have been completed. So, what this means in plain English is that the landlord can assume after everything has been submitted to the agency properly, if the agency does not get back to them within 30 days and say, yep, this is approved, at that point, the landlord can assume it's not going to be approved and doesn't have to include that income towards the tenant's income. So those are the two main statutory exceptions. So now we've got 3 of the 4 basic building blocks, right? We've got who it protects, we've got who has to follow the law, and we've got what is the source of income that they can't discriminate against somebody on. So now what do we mean by this final piece, discrimination? When we say you can't discriminate against them, what does the law consider to be discrimination? Well, I will tell you this, the Elliott-Larsen Civil Rights Act and the Landlord-Tenant Act are identical in terms of the prohibitions and the remedies. It is identical language in both statutes. So one violation violates both statutes. One act of discrimination will violate both the Landlord Act, Landlord-Tenant Act, and the Elliott-Larsen Civil Rights Act. And as I go through here, because they are the same, I'm only going to provide one set of citations, and that's going to be to Elliott-Larsen. But the same thing does apply to the Landlord-Tenant Act as well. So it is considered discrimination under the law now in Michigan to deny or terminate a tenancy to a prospective or current tenant on the basis of their source of income. Very simply put, an example can't just outright say, we don't accept vouchers. They have to accept vouchers now. It is also considered discrimination to require or impose different price, terms, conditions, fees, or privileges on the basis of source of income. So this would be, for example, if you're on a voucher, you can live here, but you can't use the pool or the gym or rent a garage. In fact, we just did some testing and we found one where they had pretty much that exact, they made that exact statement to someone. If you're on a voucher, you can't use the pool, or words to that effect. That is considered discrimination now as of April 2nd in the state of Michigan. Or all tenants with vouchers have to live in this specific section of the property. That is creating different conditions for tenants on the basis of their source of income. That is discrimination in the state of Michigan now. Or we will only we'll only do 1-year leases for people who are on Social Security. If you are doing 6-month or 18-month leases for people in general, but you're saying if you're on Social Security because of your source of income, you have to do a 1-year lease, those are different conditions, fees, terms, or privileges on the basis of source of income, and that is discrimination in Michigan. It is considered discrimination now to require or impose different prices, terms, conditions, fees, or privileges because the tenant received emergency rental assistance. I've seen this happen too. This is where a landlord will say, well, you know, back in April, you had to get state emergency relief to pay for your rent. So we're not going to renew your lease unless you make an extra deposit this year. That is imposing a different term because they received emergency rental assistance. It is considered discrimination to make a unit unavailable or to deny a unit on the basis of a person's source of income. Again, a refusal to accept vouchers is now considered illegal discrimination in Michigan. It is also illegal to take a unit off the market to avoid renting to someone with a, for instance, housing choice voucher. Remember back in the early days of fair housing, they would often send testers. They would send a black tester to an apartment building where there was a for rent sign.
But I was like, it's. I lied for the first part. I didn't lie for the second one.
Okay.
Could you everyone please put yourself on mute except Stephen?
Yeah, I'm not used to hecklers doing this, but that's okay. But back in the early days of fair housing testing, a lot of times when they were doing testing for race, they would send a black potential tenant to an apartment building that had a for rent sign in the window. And when they talked to the property manager would say, oh, yeah, we decided to take that one off the market. We just forgot to take the sign out of the window. But then a white tester would come along later and that sign would be right back up in the window. Same kind of thing, same kind of theory applies to source of income discrimination in Michigan now. It is also considered discrimination to represent a unit as not available when it actually is, based on a prospective tenant's source of income. Again, that's the taking the sign out of the window. It's what happens when a prospective tenant with a housing choice voucher inquires about available units and the property manager says, oh, we have none available. But then a prospective tenant who is entirely what we might call private pay is told, oh yeah, we definitely have some units available. So you can't represent a unit is not available to try to get around renting to someone who has a housing choice voucher or based otherwise on their source of income. Also, and this is maybe less obvious, use of separate waiting lists for people with or without vouchers. If you are this creates a couple of problems. First, it imposes different terms on people based upon their source of income, right? People with a voucher go on this waiting list, people without a voucher go on this waiting list. Second, it causes a representation that a unit is not available when it is, because if a unit is available for people on this private pay waiting list, then it is legally available to the person on the voucher waiting list, but they're being told it is not, because the priority is to go to the person that's on the private pay list. Doesn't matter, it's still available. You still have to tell them it's available. It is discrimination to knowingly fail to tell a prospective tenant about a rental listing based on their source of income. So this is what happens, for instance, when there are several units available, but a property manager only talks to a prospective tenant who's got a Section 8 voucher about the one specific unit that they asked about, and doesn't tell them, despite the fact the property manager knows, oh yeah, we have several other units that are very similar, that are in that same price range. But we'll definitely volunteer that information to a prospective private pay tenant. That is discrimination because they knowingly failed to tell this prospective tenant about a rental listing because of their source of income. It is a violation of the statute. It is considered discrimination to refuse to allow a prospective tenant to inspect a rental listing based on their source of income. So you can't flatly refuse to show rental units to someone because they're receiving assistance. But even if the landlord does show some apartments, it can still be a violation. Consider this. A potential tenant with a grant from, say, a homeless shelter. We have some of those here in Flint that provide grants for people to live. That person's only shown units in rundown buildings, the oldest, most worn down buildings in the complex. But other tenants who aren't receiving a voucher or any kind of a subsidy are shown the newer, updated models. This is a violation because it treats people differently based on the protected class. And this is a practice that's designed to discourage people who have vouchers from renting there. The idea is to make them voluntarily get themselves out of contention. It is also discrimination to represent to a person that a unit is not available when it really is based on their source of income. Again, this is a lot of the same stuff is covered by this. So again, this is the rental sign that's being taken down, or when the person says, I've got a voucher, they say, oh, we've already rented that, or we really don't have any units available. I'd really like to help you, but we're all full up, is what they tell the person who has a voucher. And then when somebody comes in who doesn't have a voucher, oh, we've got so many units that we're in trouble with corporate, which is literally what somebody told us once during one of our tests. You would be absolutely surprised at some of the things people will say when they don't know we're testing them. This obviously is a clear violation that's discrimination based on the source of income. It is also discrimination to exclude any rent voucher or subsidy as a source of income when calculating income criteria. What does this mean? Well, a lot of places have minimum incomes to be eligible to live there. Commonly, this is 3 times the monthly rent. If you don't have income of at least 3 times the monthly rent, you aren't eligible to live at our apartment complex. If the landlord is doing this, which they are allowed to do this, but they have to include any assistance that tenant or potential tenant is receiving as part of that income. So they can't say you have to have income of at least 3 times the monthly rent, but we're not going to include your voucher towards that. It is also considered discrimination to discourage the rental or lease of any rental unit to the prospective or current tenant based on their source of income. So, of course, denying somebody the ability to rent a unit is discrimination, but so is trying to accomplish the same thing by discouraging them from renting it so that they voluntarily move on. This is things like telling a potential tenant with a voucher, well, honestly, this is a really tough neighborhood. It's probably not safe for your kids here. Or, the people here are very snooty. They're going, you're probably not going to fit in with them. They're, hoity-toity and very closed off, and I don't think you'd be comfortable. So that it encourages people on the vouchers to look elsewhere. This is a big one. This is going to get a lot of people in trouble because it gets a lot of people in trouble in other forms of discrimination. It is considered discrimination to make statements of any kind related to the rental or lease of any rental unit that indicates a preference, limitation, or requirement based on any source of income. So again, obviously you can't have a policy that you won't accept vouchers, but even if you actually do take vouchers, you still are violating if you say we don't take vouchers, even though officially your policy is that you do. Because now you have made a statement related to the rental or lease of any rental unit that indicates a preference, limitation, or requirement because of that source of income. Or we only take up to 5 people at a time who are on vouchers. Again, you cannot represent that you limit the number of tenants with vouchers that you accept. And you can't require or claim to require additional documentation or put up extra hurdles for a person who's receiving housing assistance. If you require it for someone with a voucher, it's got to be something you require for someone without a voucher. So if you don't require applicants who don't have a voucher or who don't have some kind of a subsidy to provide tax returns, you cannot say on your application form or in any other manner, applicants using vouchers have to provide us 3 years of tax returns. Even making that statement is a violation. And this includes everything. It includes your signage, it includes your advertising, it includes your websites, it includes your rental applications, which a lot of property managers overlook. It includes verbal communications, like the statute says, statements of any kind. So it covers any form of communication. This is another one that's kind of big. You can't indirectly violate the law by going through a third party either. You cannot assist, induce, incite, or coerce another person to commit an act or engage in a practice that would violate this law. So, for example, let's say that Slumlord LLC tells Alan, the property manager at Nasty Old Apartments, that if he takes in anyone who pays with a voucher, he's going to get fired. Now, regardless of whether Alan actually follows this order, and regardless of whether or not anyone who actually applies has a voucher, Slumlord LLC is still on the hook for this violation just for making that threat. This is something a lot of property managers do not understand, a lot of landlords do not understand. It is a violation of the law even to tell your employees, we don't want these people here. So if Alan does what Slumlord said and rejects people because of their source of income, guess what? Alan is going to be on the hook for that violation. And then he's going to say what every employee who gets charged with a discrimination case says, right? I was just following orders. I call this the Nuremberg defense. Yeah, I'm sure everybody here understands history. Remember Nuremberg, right? That's where they put the Nazi war criminals on trial after World War II. And they all said, I was just following orders. Well, if you remember history, you'll remember it didn't work for them, and it's not going to work for Alan. I was just following orders is not a defense. So when I tell people this in trainings for other kinds of discrimination as well, the employees all get very concerned, and they're like, well, what am I supposed to do if that happens? Well, the first thing an employee should do in that situation is become familiar with Michigan's Whistleblower Protection Act. You can find that under MCL 15.362. This law makes it illegal for your employer to fire or otherwise punish you for reporting your employer's violations of law, and actually allows you to sue your employer if they do so. So what I always tell people is first, familiarize yourself with this law. And second, report this threat or whatever the other violation was to the Michigan Department of Civil Rights. Because it is not worth some of the bad stuff that can happen to you to put up with this. And I'll get to the bad stuff later. It is also against the law for someone to retaliate against someone for exercising their rights under the law, or to retaliate against somebody who aids or even encourages someone to exercise their rights under this law. So sometimes a landlord will try to be cute, and they'll terminate someone's lease, or they'll refuse to renew the lease at the end of the lease period because this person has asserted their rights under the Fair Housing Act or under the Michigan Persons with Disabilities Civil Rights Act or under Elliott Larson. And the landlord will do this clearly in retaliation. And then they're going to say every single time, well, I don't have to renew anybody's lease and I can refuse to do so for any reason. That is not actually true. Because if they are refusing to renew someone's lease because that person enforced their rights under the law, they are retaliating, which is a violation of the source of income discrimination laws, and they are denying this person housing because of their source of income, which is another violation of this law. The same thing applies if your neighbor tells you they were discriminated against and you tell your neighbor, you know what, that is a violation of the law and you should stand up for your rights. And when your landlord finds this out, the landlord tries to evict you or refuses to renew your lease because you told this person, you encourage them to stand up for their rights. It is a violation of the law for the landlord to refuse to renew your lease or to try to terminate your lease because you did that. And remember, Alan, if Slumlord LLC threatens or otherwise coerces Alan into violating the law, that of course is one violation. If they actually follow through on the threat and they fire or demote Alan for not violating the law, that is a separate violation because they are retaliating against him because he has refused to help someone. He has encouraged someone to stand up for their rights, essentially, at this point. So he would actually have now an additional legal claim against Slumlord LLC for discrimination under this law. So even if someone is not a direct tenant of the landlord, but the landlord retaliates against them because this person exercised their rights or aided or encouraged someone else to do so, that landlord is still on the hook. And of course, physical threats are obviously a no-no. We understand this, right? Everybody knows this. But so is creating a nuisance to intimidate or annoy somebody because they exercise their rights or help someone. So some landlords sometimes realize they can't out and out evict someone, right? So they'll try to make life miserable for them so that they will leave voluntarily, quote unquote. This is things like making sure the company's diesel dump truck with a bad muffler is parked and running outside that tenant's bedroom window every morning at 4 a.m. or refusing to do repairs or otherwise engaging in harassing or intimidating behavior. This, again, is a separate violation. In fact, I would argue every morning that dump truck is outside that person's window for the specific purpose of trying to harass or annoy them, that is a separate violation. So in 1 week, you could have 7 violations. So there is bad stuff. Remember I mentioned it's not worth going through the bad stuff to violate this law because your boss told you to. There is bad stuff if you violate this law. Why? Because a law without a remedy is just a suggestion. Someone famous once said this. Do you guys know who this was? Anybody know? No? Nobody knows? It was me. I'm the one who said it. But I still think it's a pretty good observation, right? Because if you have a law and there are no consequences if you break it, what's the point of having the law? So violating this law does come with some consequences. First, the victim can actually sue for both injunctive relief, which is fancy lawyer talk for a court order that says the landlord either has to do something or stop doing something or face the wrath of the judge, or the victim can get damages. Again, fancy lawyer talk for money. And since most landlords care mostly about money, I'm going to focus right now on the money part. Each violation, as I said, is a separate cause of action. So remember Alan, the guy whose boss threatened to fire him if he showed units to people with vouchers and then followed through and fired him when he did so? Alan has at least 2 separate causes of action, and Alan can get separate damages for each one. So in addition to collecting damages for money Alan lost as a result of the violation, such as, for instance, he lost wages, he could also recover his costs and attorney fees because those are specifically listed under the statute as things that can be recovered as damages. And I can tell you, attorney fees are often far more than the actual damages. And I'm going to point this out as well. This is also reasonable attorney fees, not actual attorney fees. And that does make a difference. So for instance, let's say Legal Services of Eastern Michigan represents a plaintiff on one of these cases, but we don't charge them because we don't charge our clients, right? This doesn't mean the landlord is off the hook for attorney fees, because we are still allowed to recover what we reasonably could have charged that client. And I'll tell you that right now, courts are routinely awarding attorney fees of $300 an hour or higher in circuit court and federal litigation cases. So that is definitely bad stuff that can happen to you if you violate the law. But in addition to things like lost wages, Alan would also be able to recover monetary compensation for things like stress, anxiety, sleeplessness, humiliation, any other mental anguish he suffered as a result of being threatened or fired in violation of this statute. And I will tell you that these amounts are unpredictable. Sometimes they're a couple $1,000s. Sometimes they run into hundreds of thousands of dollars, depending on the circumstances. I was in a conference similar to this yesterday, and they talked about a woman in California who got $7 million in damages because of a violation similar to this in mental and emotional anguish. So this can be very, very significant. Sadly, however, punitive damages are not allowed under the Elliott Larson Civil Rights Act or the Landlord Tenant Act. So this is one of the differences between if this was a federal law and where this being a state law is significant, because under the Fair Housing Act, you would be allowed to collect punitive damages. You cannot do so under Michigan's Elliott Larson Civil Rights Act. So those are the damages that can be recovered in state court, because remember, it's a state law, right? So it doesn't go to federal court unless it's attached to some other kind of violation and complaint. But cases can also be brought administratively through the Michigan Department of Civil Rights. These administrative hearings can result in additional consequences for people who violate the law. For instance, MDCR has the ability to impose fines in addition to damages and attorney fees that could be recovered in court. And those fines are fairly substantial. For instance, a first violation, you can have up to $10,000 in civil penalties. Second violation within 5 years, it jumps up to $25,000, and a third within 7 years jumps up to $50,000. Those are fines in addition to damages and attorney fees. And there are other potential collateral sanctions under the statute as well. For instance, if you have a professional license, such as a real estate license, it can be revoked. And if you or your company has government contracts, or you or your company are a subcontractor for someone who has a government contract, MDCR is required, not an option. They are required under certain circumstances to terminate those contracts. So that is a very, very substantial kind of collateral sanction that can happen if your company violates the law. And of course, there's always the ominous and mysterious other relief the commission deems appropriate. What does that mean? Well, I'm going to be honest with you. I don't know. But the one piece of legal advice I am going to give you today is you probably should not try to find out. And that's pretty much the information that I have that's prepared on this new law. So thank you for paying attention, and I am available for any questions if you have them.
Okay, our first question is from Matt, and he
Hi,
asked,
Matt. Long-time listener, first-time caller, right?
This is your first-time caller. Do the amendments to the Elliott Larson include more damages than was previously available?
I'm not totally sure I understand the question. I guess the short answer is yes, because there were no damages available previously for source of income discrimination. It doesn't add to Elliott Larson in general any kind of additional damages. So the same kind of damages that you could get for racial discrimination housing cases under Elliott Larson is the same sort of damages you could get for source of income discrimination, which again, under Elliott Larson does not include punitive damages. That's the major distinction between that and the Fair Housing Act.
Are you familiar with the law Jones versus Kansas City, Western District of Missouri? If not, we can skip that question.
I don't think that I am, no, unfortunately.
Okay. Can food stamps be used as a source of income when trying to apply for an apartment?
I don't believe that that counts as a source of, well, let me qualify this. This is a question that's kind of open in my mind in some ways. If they are, it depends what it's being used for, I think. So if someone is saying, if the landlord is saying you have to have income 3 times the amount of monthly rent, I think they have to include all forms of public benefits that are directly related to housing. But I don't think a bridge card in Michigan, I don't know if maybe the question's for somebody out of state, because we use bridge card now instead of food stamps in Michigan. But my understanding is, and again, this law is only about 3 weeks old. My understanding is that they would not have to include that as a source of income for calculating whether or not, your income is 3 times the amount of the rent. But I think that would be a violation of them to say, well, if you have a bridge card, we don't want you here. So I think in that form of discrimination, I think it would fall under that, but I don't think that it would fall on, or yeah, I don't think it would be included in calculating your minimum income to qualify. But that's just kind of at this point, pretty much all that we're doing, right, is almost everything we're doing is a guess, because it's such a new law. It's only been in effect for a couple of weeks.
Okay, and then does the number of units have to be in the same location, or would this apply to a landlord who owns and rents 5 single-family homes?
Doesn't matter where they're located. If they have more than 4 units that they are using for residential leases, then it applies to them. Now, let's say they have 4 houses, and then they have like an office building that they rent out. That's a commercial lease, right? They don't have, that person wouldn't have, they would have 5 rentals, but they wouldn't have 4 residential rental, or they wouldn't have 5 residential rentals. So even though they might have 4 residential rentals and 1 commercial rental, they would still not fall under this because they don't have 5 residential rentals.
What about retaliation? Is it difficult to make a complaint with eviction retaliation? How difficult is it to prove?
That is a more complicated question because it kind of depends on the context. Because under the Landlord Tenant Act, there's also a rule that says under most circumstances, a landlord cannot try to evict someone in retaliation for enforcing their rights in general. And there's a 90-day period after that that enforcement of your rights has taken place, where there's a presumption that it's retaliatory. That's a defense. It's a shield. It's not a sword. It's your landlord takes you to court because they terminated your tenancy, and you say, they only terminated my tenancy, judge, because I told them that they have to put in a wheelchair ramp because it's required under state law, and so their answer was to terminate my tenancy. So they can't do that. If you're using that as a defense, then with certain limitations that would apply. And it's typically not very difficult to prove, because you can look, here's the email where I asked for it. Here's the notice to quit that I got the next day. In terms of, for instance, they want to terminate your lease at the end of your period, and it may have been a while, because you said, for instance, I have a client who's lived in an apartment for 20 years. And she recently became disabled, and now she is on Social Security disability. And let's say her landlord decided, well, I'm not going to accept Social Security disability payments as a form of payment or as a source of income for you. But she has like 3 months left on her lease. And so they wait until the end of that lease, and they just send her something that says, we're not going to renew your lease. That may be more difficult to prove, because they're going to say, well, we just decided that we don't want her as a tenant anymore. We can decide that arbitrarily for anybody. So you can always make the claim, right? You can always bring it. You can say that sounds fishy. And I mean, you can always sue for it. Whether or not you're going to win is another question, but you can always sue. And then what I would do in part of that lawsuit would be I would ask for discovery, and I would ask for all internal emails, memos, notes, a copy of their tenant file, because what you're looking for is anything from, from Sloan Lord LLC to Allen, an email that says, no, we're not going to take her in here anymore. Get rid of her. Don't renew her lease. I don't want people on, disability or any kind of assistance in my building. Then you've got your smoking gun. But those kind of cases are easy to bring, but they are hard to prove often.
How can nonprofits and their community partners increase awareness of Michigan's source of income protection?
Well, through things like this, obviously. I encourage anybody who is involved in any way in social programs or is involved in housing, or is involved in any community programs, especially in communities that may have a high percentage of people who are, underprivileged or low income, to just, plaster up posters, provide this information anywhere they can. I would love to see media campaigns talking about this, but of course, nobody's going to have the budget for that, for the most part. But just raising awareness any way that you can, the same way you would raise awareness anywhere else, is probably important.
Does a landlord need to consider federal student loan like Pell Grants? What about student loans? Since both are typically awarded per semester or per school year, would the ongoing basis test include student aid form countable income? Well, for instance, like I'm thinking, if you're going to school and you're getting awards every semester, part of that is for living expenses.
Right. Yeah. So like a Pell Grant or a scholarship, something. Yes, because that is a legal source of income. So they absolutely would have to consider that. And you can't, and a landlord wouldn't be able to. I remember back when I was in college and we lived in the student ghetto. There were landlords that were near the student ghetto who were like, no, we won't take students. We won't take anybody who's paying for their classes or who's going to pay for their rent using student loans. Back when back in Missouri where I was from, that would be a violation because that's a source of income and it's a legal source of income, and they can't say, I don't want to take anybody who's paying for it with student loans or Pell Grants.
Okay. How do you prove non-renewal is due to discrimination? I'm not sure if you answered that or not, but
I think I did in my own roundabout rambling way. The fact of the matter is, like I said, it's easy to bring those claims. It's a little harder to prove it. There are the easiest ways to get the smoking gun. It wasn't a source of income case, but I recently had a case where a property manager literally sent a letter to my client saying, I don't care if your child is autistic, your child cannot sleep in the same bedroom as you, which was both familial status discrimination and disabilities discrimination because they failed to make a reasonable accommodation. And she was very, very nice to put that in writing for us. So that was very easy to prove. It's sometimes harder to prove when it's not quite as blatant as that. Hopefully during discovery, you can get emails or memos or notes that say, we want to get rid of this person because they did this. Sometimes during discovery, you can get from them a list of all the people who they refused to renew leases for. And then you can check those against the court documents and see if those people were involved in any kind of litigation involving discrimination. But they can be difficult to prove under those kind of cases because the landlords are all going to say, well, I can refuse to renew a lease for any reason or no reason at all. And the judges are conditioned to accept that. And that's clearly not the state of the law when it comes to discrimination.
okay. How would this tie to credit checks or requiring cosigner for low credit score? Or does it?
It wouldn't apply to that because that's more of a I guess it would be this. If you're saying anybody who's receiving assistance of any sort has to have a cosigner, that is clearly a violation. But if you're saying, people who have below a certain credit score will have to have a co-signer. That probably is not discrimination because, again, that's not based on their source of income. That's just based on their credit score. And there may be some kind of correlation between that. There may be some kind of disparate impact argument that could be made, but on its face, at least, it's not discriminatory based on source of income.
And since we have a few more minutes, back to the Kansas City, Jones versus Kansas City case. Steve says it's another of the cases where a landlord forced to participate in Section 8 program due to source of income coverage raises a Fourth Amendment claim challenging HUD's record production requirements, if that makes sense to you.
It kind of does. I'd have to know more specifics about it. I'm not overly familiar with that case. I think it's I've heard it. I think it's a relatively new one. Yeah, I really wouldn't be qualified to comment on that.
And then can you mandate that a resistant landlord properly registered for MDHHS rent assistant payments? They have only in-person or online portal payment options. I'm not sure if you can answer that.
I'm not. Can you repeat the question?
How can you mandate that a resistant landlord properly registered for Michigan Department of Health and Human Services rent assistant payments? They have only in-person or online portal payment options.
Well, if I guess I'm not. I guess I don't know the answer to that question. I have a problem with requiring people to pay by a portal anyway, which is a different issue, I think. But and some of it's going to depend, I think, on why they're doing it. If they're accepting, electronic payments from any other payment source, but they say no, we're not going to register with MISTA, that starts to look like we are intentionally discriminating against people on vouchers because we are setting up a situation where we can't accept payments for them. So that starts to look like discrimination to me, and that looks like something that maybe a complaint would be appropriate for. But if it's just a situation where they're like, you know what, I'm old school, I don't understand all these newfangled computers that have only been around for 70 years, and I just don't want to take any kind of electronic payment. I only want cash or check. I don't think that doesn't sound to me like it's discriminatory. It just sounds to me like a landlord who's tech aversive.
Steve, I think this is referring to the Sigma program through DHHS when somebody gets approved for SARE payments. So it's not a really rental payment.
For the state
it's a
emergency
state
relief
emergency relief payment. And the landlords have to complete an I-9 and register through Sigma in order to get the payment from the state for the SARE. I think that's what it's referring to.
It could be. I think my answer would be the same. I think you could make an argument that it's discriminatory if they would take electronic payments from other sources, but they refuse to take it from this source. So if they're willing to fill out all the, whatever bank forms they have to fill out to take payments through a portal electronically, or to take payments, direct deposit from the client or from the tenant, but they refuse to do the paperwork that allows them to take direct payments from MISTA. If MISTA insists this is the way we're going to pay it, or whatever agency, I think that starts to look like discrimination. I think that's something that you could act on under this statute. Now, there may be other solutions unrelated to the source of income discrimination statute that you might be able to use. But in terms of this particular topic, I think that would be kind of the defining difference. Do they take it from other electronic sources and they're just refusing to take it from them? If so, that looks like discrimination. If they just refuse to take electronic payments from anybody, that maybe doesn't look like source of income discrimination.
Okay, and then Dale says, I don't hear anything about mobile home parks rights. There are over 1,200 parks with issues. Why not mention those? I'm not
because
sure. Yeah.
And the reason is the law applies to mobile homes, it applies to apartments, it applies to single family houses, it applies to duplexes, it applies to all of them the same way. So there's no distinction between how the law applies to mobile homes and how it applies to anything else.
Would it include the sale of a mobile home as your income if you wanted to buy a mobile home?
No, because this is only for tenants. Like I said, it doesn't cover real estate sales, and while mobile homes are personal
Right.
property, it doesn't cover that either. It only covers rentals. So if you live in a mobile home park and you are renting your mobile home, then this law applies. But it would not apply towards selling or buying a mobile home. Just like it wouldn't apply to selling or buying a single family home, out in the suburbs somewhere, or buying a condo someplace.
Um,
But you're renting a lot.
Yeah, if you're renting a lot, then yes, it would apply to the rental of the lot. So if they said in our mobile home park, we're not going to accept lot rent from anybody who has a housing choice voucher, that would be discrimination. But if they say, well, we're not going to sell a mobile home to somebody who has a housing choice voucher, it's not covered because it's a sale. But if they say we're not going to rent a mobile home to somebody who has a housing choice voucher, then it's discrimination under this law because there's that distinction. You could potentially, I suppose, make an argument that they're discriminating in terms of the lot, refusal to rent the lot, if they're refusing to sell someone a mobile home. But that becomes a lot more of a complicated question than I really have time to let my gears and my head grind and give an immediate answer. I can already smell the smoke coming from the gears grinding. So,
All
I
right.
think that's it. I mean, they do have a housing voucher that can be used to purchase a home. Mishta has a program for that, and I wondered, since you say it's only tenants, then that means that if they wanted to use their voucher to purchase a home, they also get down payment assistance. You're saying that wouldn't be allowed because
that
they're
would
not
not,
a
well,
tenant.
I mean, I don't know whether or not it would be allowed, but refusal to take that would not be a violation of this particular law. Right. So just
Okay.
because it's not a violation of this law, it doesn't mean it might violate some other law, but I'm only concerned today with just this one particular, two particular statutes.
I think that's all the questions.
All right. Well, thank you, everybody. I appreciate the great questions and the attention and nobody snoring with their mute off. So that's okay. So my father's a Baptist minister, and he always used to complain, when people would snore during his sermons because, especially when it woke him up. So.
Okay, moving right along. The thing you may not know about Stephen is he is also a comedian in his other life. And so we do get a lot of humor every now and then. But I'd like to thank you, Stephen, for being part of the conference today and giving a wealth of information on a topic that we definitely need information for. One thing that I did want to mention is that I did do an analysis of 5 different paired testing tests this week, and 4 of the 5 had evidence of discriminatory practices. So it's definitely out there, and so we need to spread the word. So again, I thank you very much, Stephen. And again, this is being recorded, so this will be available so you can hear his jokes over again and again if you'd like. But we are going to take a break.
Why would you do that to yourself?
Yeah, well, I'm not going to do it, but anyway, we're going to take a break. We will be back at 11:10 for our third speakers. So get a stretch, do whatever you need to do, and we'll be back at 11:10 for our next speaker. Thank you. All right, it's 11:10, so we're going to get back to our presentations, and everything's been really exciting, lots of good information so far. But I would like to introduce our next speaker. Our next speaker, Leah Rothstein, is a co-author of Just Action, How to Challenge Segregation Enacted Under the Color of Law, which describes how local community groups can redress the wrongs of segregation. Leah has worked on public policy and community change from the grassroots to the hall of government. She led research on reforming community correction policy and praxis to be focused on rehabilitation, not punishment. She has consulted nonprofit housing developers, cities and counties, redevelopment agencies, and private firms on community development and affordable housing policy, practice, and finance. Her policy work is informed by her years as a community and labor organizer, working on issues such as housing, environmental justice, workplace safety, and youth leadership. Leah also writes a regular column, which you can subscribe to for free at justaction.substack.com, which will be in the chat. Please welcome Leah Rothstein.
Hello, good morning. Thank you, Patricia. Everybody can hear me okay?
Yes.
Yes. Great. Thank you all for being here. Just real quick, excuse me if I have to stop and cough or take a sip of water. I woke up with a bit of a sore throat, but I will do my best to make it through. So, as you can imagine, I will be speaking about racial segregation, the segregation of our communities, a bit about how we came to be a racially segregated country, and then what we can do to begin to challenge and redress that segregation. So I'm going to start by talking about the concept of de facto segregation. We've likely all heard this term before. It's how we as a country have explained to ourselves why our communities are racially segregated, why communities in all parts of the country, in communities in all parts of the country, there are neighborhoods that are all or mostly white and neighborhoods that are all or mostly African American. This segregation of whites and blacks has been persistent and consistent for a long time in our country, and we tell ourselves it's a form of de facto segregation, not caused by laws or policies, but maybe caused by private actors, bigoted landlords, realtors, mortgage brokers who refuse to sell or rent homes to African Americans in white communities. Or maybe it's a result of personal preference and personal choice. People like to live around others who look like themselves, and so we just self-sort into same race neighborhoods. So many of us look around and we think it's too bad that we're so segregated, but there's not much we can do about it, because when we understand that it happened in a de facto manner, where it happened naturally, it can only unhappen naturally. We not only have no obligation to do anything about it, but we have no agency. Now, the Supreme Court has agreed with this. Chief Justice John Roberts has written in opinions that because the government had no role to play in creating segregation, it has no role to play in challenging it or undoing it. Well, in this context, my father, Richard Rothstein, wrote The Color of Law in 2017. It came out in 2017. And in The Color of Law, he called the de facto segregation idea an utter myth. He said, sure, private action played a role, those bigoted landlords and realtors and mortgage brokers, but their actions were incentivized and often explicitly required by government at all levels to ensure that communities, as they developed on a segregated basis, and then that segregation was maintained. And these were government policies from the federal government, state governments, and local governments. And what he argued in The Color of Law is that these government actions were constitutional violations. They were in violation of the Fifth and 14th Amendments. And as such, once we reckon with, moments when our government violates the Constitution, we as citizens, as residents of this country, have an obligation to remedy the impacts of those constitutional violations, not only to reverse them, those unconstitutional policies, but to remedy their ongoing impacts. So far, as a country, we haven't stepped up to this obligation when it comes to racial segregation. I will get to how we can do that in a moment, but first I want to set the context a little bit more and give an example from history. So again, The Color of Law is filled with examples of government policies that ensured segregation was created and maintained. One of those examples, one of the more powerful ones, comes from the mid-20th century. Following World War II, When millions of war veterans came home from the war, started families, there was a baby boom. Those families were met with a housing shortage. Not many homes were built during World War II nor in the Great Depression prior to that. So families needed homes, and the federal government decided to step in to try to address this problem by helping to build homes for some of those families. And it did so by helping to suburbanize the country. Now, at the time, we weren't a suburban economy. Most people lived in urban areas or on farms, but most jobs were in factories, which were in urban centers near rail lines and ports. And most people had to live near where they worked, so most people were in fairly racially integrated urban areas. Now, when the federal government wanted to step in post-World War II and meet this demand for housing, it did so by subsidizing the suburbanization of the country, and then ensuring that those suburban homes were only available to white families. So one example, again, just one, this happened all over the country, but Levittown outside of New York City is one of the more famous examples. It was built by a builder named William Levitt on Long Island. And at the time, Long Island was rural. Not a lot of people lived there. So William Levitt, he wanted to build 17,000 homes for families who were working in New York City and couldn't find homes. 17,000 homes is a lot of homes to build. He didn't have the capital to build them himself. He couldn't get a bank loan because it seemed slightly crazy, speculative. Not a lot of people lived out there. The only way he could build Levittown was through a federally backed loan guarantee provided by the Federal Housing Administration and Veterans Administration. And in the manual for those agencies to provide these kinds of loan guarantees, it said it would only provide these loan guarantees to developments that promised that the homes would only be sold to whites. Now, in order to receive this subsidy from the federal government, Levitt had to write in the deeds of the homes he built what are called restrictive covenants. So covenants in the deeds of homes that said that the home could only ever be owned or occupied by whites. And the manual for the Federal Housing Administration went even further and said that the Federal Housing Administration wouldn't subsidize developments that were even located near where African Americans lived because, and I quote in the manual, it would run the risk of infiltration by inharmonious racial groups. So written into government policy, ensured that federally subsidized subdivisions and suburbs had to be built on a segregated basis. So this notion of de facto segregation that had happened by accident without the involvement of government is nonsense. This is just one example. So suburbs around the country were segregated in the same way as Levittown. And, Levitt and builders like him at the time, he was a bigot. He wasn't shy about it. He said at the time, if he was left to his own devices, he wouldn't have sold his homes to African Americans anyway. But if we can imagine an alternate history where our government, instead of doing what it did, lived up to its constitutional obligation and said, look, we'll help you build Levittown and suburbs like it on the condition that you sell your homes on a non-discriminatory basis, the country would look very different than it does today. So today, Levittown is 2% African American population in a surrounding area that's 13% African American. That disparity is due to the policies in place when the homes were first sold. Even though those restrictive covenants are no longer legally enforceable, anyone can buy homes in Levittown today because of how these policies that were in place when they were first sold. It's somewhat of an empty promise, and the segregation and the exclusivity of homes in suburbs like Levittown remain for generations. And here's why. So the homes in Levittown and suburbs like it, when they were first sold, they were affordable to working families of any race. A family with a worker in the post-war economy could have afforded one of these homes. They cost about $100,000 in today's money. White families could get an FHA-backed mortgage. If they were veterans, they could get a VA mortgage with zero down payment requirement. So these homes and the home buyers were subsidized as well by the federal government. Those homes no longer cost $100,000. In Levittown, the median home price today is almost $700,000. In suburbs and subdivisions around the country, 2, 3, 4, 500,000. Some places over $1 million. These are homes that started at $100,000 when they were first sold. So the white families that got into the homes when they were affordable, they accumulated wealth as those homes increased in value over generations. They could use that wealth to send their kids to college, to enjoy their own retirements, to most importantly, hand down that wealth to their children and grandchildren to help them buy their own homes. And this is why the consequences of those policies that created segregation have such long, far-reaching impacts. So today we have a wealth gap between blacks and whites that is staggering. It's about average African American household wealth is about 5% of average white household wealth. You would think that could be explained by gaps in average incomes between blacks and whites, but it's not. The income gap is far smaller than the wealth gap. The wealth gap, that huge gap, is explained largely because of the policies in place that helped whites accumulate wealth through home ownership while explicitly prohibiting African Americans from doing the same on an unconstitutional basis. So, there were many other policies from all levels of government that created the racial boundaries that exist today. This is one of the more powerful. In 1968, we passed the Fair Housing Act, said you can no longer discriminate in the sale and rental of housing. So anyone can buy homes in suburbs like Levittown. Again, somewhat of an empty promise when whites are far more likely to have intergenerational wealth to be able to afford those homes, and blacks are far less likely to have that because of past government policy. So the Fair Housing Act, because it only looks to the future, it doesn't do anything to address this wealth gap that exists because of past government policies. And as a result, it hasn't had a very big impact on the wealth gap, the home ownership gap between blacks and whites, and the racial segregation of our communities. All of those have either remained the same or gotten worse since the Fair Housing Act was passed. Now, I'm not saying the Fair Housing Act wasn't essential and very important. It was. It has done a lot of good, but because it didn't address the disparities that already existed when it passed, it is limited in what it can do to actually correct for those issues. So the wealth gap is one of the ongoing consequences of the policies that created segregation, but our segregated neighborhoods are to blame for many of our most serious social problems and biggest racial disparities in this country. You may have heard the term zip code matters. Where you grow up has a big impact on your life outcomes. So because of segregated neighborhoods, we have disparities in health outcomes, income outcomes, educational outcomes between Black and white children and adults. African American children who grow up in segregated neighborhoods, because those neighborhoods tend to be zoned to be closer to industrial land uses, closer to freeways, older buildings, more likely to have sites in the neighborhood that used to be industrial uses, so soil contaminated, more lead paint in the buildings. Those children grow up to have higher rates of cancer, higher rates of cardiovascular disease, and shorter life expectancies, significantly shorter life expectancies than children who grow up a couple of miles away in the same city, but grow up in white neighborhoods, more affluent neighborhoods that have healthier air and more access to open space and better access to healthcare, et cetera. So when we talk about segregation, as you all know, we're not talking about a benign separation of people where some people are here and some people are here and all else is equal. We're also talking about a separation of opportunity and resources. So not only, I would argue, do we have a constitutional obligation to redress segregation, we also have a moral obligation if we believe that every child in this country should have equal access to long, healthy lives, then we have to address this issue. So many people read The Color of Law. It came out in 2017. It's been very widely read. As a result, the de facto segregation myth has somewhat less currency in this country. We hear a lot more about redlining and restrictive covenants. There's a lot more attention on those issues than there was 5-10 years ago. We can more clearly, many of us can more clearly see the cost of segregation, the unconstitutional actions that created it and maintain it. And once we do, and this was the call to action in my dad's book, once we see the unconstitutional manner in which segregation was created, we'll see we have an obligation to do something about it, and then we'll take action and do something. But in reality, a lot of people got that call to action when reading The Color of Law, and then came up to my dad after they heard him talk about it and said, sure, I get it, but what can we do? How do we begin to challenge segregation? So I was one of those people who asked him that question. So he said, well, let's try to answer that together. And so we teamed up to write Just Action to help answer that question and to help readers understand the many things we can do to live up to our obligation to redress segregation. And what we argue in Just Action is that to live up to our obligation to challenge and redress segregation, we need a newly activated civil rights movement, one that starts locally, that, the civil rights movement of the 60s and 70s made huge gains, but left residential segregation virtually untouched. So we need a movement made up of local groups that can take on segregation head on. Now, we understand that while federal policy change may be necessary eventually for the massive interventions and investments we need to truly challenge segregation on a national level, we are so far from having the political support on the national level, farther now than we were when we wrote the book a few years ago. And, in fact, many of the things we talk about in Just Action are being attacked and rolled back by the current administration. But we continue to argue and we focused on this in Just Action even before this administration started these attacks. To focus, we advocate for focusing on local issues. There's a lot that we can do locally in our own communities that, can sort of fly under the radar of the federal attacks that are going on equity issues, and that we can actually pass and that can have a really big impact on segregation. Because even though the federal government had a large role to play in creating segregation, once it's established, segregation to a large extent is maintained and sustained by local policy. So there's a lot that we can accomplish locally by focusing on these issues. And we can actually pass them locally while we can't really do much on them on the federal level right now. So important to focus where we can have an impact, where many of the strategies are still possible, and where we can successfully implement them. So how do we start to build this movement, and what do we work on locally? Well, we argue, by building biracial, multi-ethnic committees, groups in our own communities that can take on these issues and understand how we came to be segregated and understand how we can get out of it. Now, this first step of building biracial, multi-ethnic groups, where leadership is shared between Blacks and whites and Hispanics and other ethnicities in the community, might seem daunting to many people. Many of us live in segregated communities, so you don't necessarily have natural social contact with people of other races. Going about your day-to-day business in a segregated community, you tend to have contact with people who look like yourself, going to the park or the PTA meetings or dropping your kids off at school or going to the grocery store. So we have to get out of our segregated bubbles to build these relationships, establish some level of trust so we can work together to advocate for change. Might be daunting. It's not impossible. In Just Action, we give examples, some really interesting examples of communities that have taken intentional steps to build these cross-race relationships with people from segregated neighborhoods of the same city. And if we have time after my presentation and you're interested, I can tell some of those stories because they're great. But I don't have time now, so I'm going to keep going. But just to show that there are ways we can build these cross-race relationships. So then once these groups are built, what can they work on? Well, there's dozens and dozens of policies and strategies that a local group can take on locally that can go a long way to remedying and redressing segregation. Now, we argue they need to do two things. They need to look forward to prevent segregation in the future, ensure that we don't continue to maintain and create segregation as we're building our communities. And we need to remedy the disparities that exist because of past government policies if we're truly to redress segregation. And then we group the strategies that we discuss in Just Action in a couple of major categories. And the first are what are called place-based strategies. These are concerned with investing in lower income communities where the concentration of poverty is a direct result of government-sponsored segregation. So to remedy the impacts of that, we want to increase investments and resources in these lower income segregated communities. And then we also understand that when investment increases in a lower income community, often people with higher incomes become interested in living there. They move in, they drive up the housing costs. The longtime residents of those communities are priced out of their own neighborhood just when it starts to see increased investments. We call this gentrification. And so we want to couple these place-based strategies with anti-displacement strategies to prevent some of the displacement that can occur when investment increases in lower income communities. So some of these strategies include passing protections for renters against protecting against rapidly increasing rents. So passing rent regulation, just cause eviction ordinances that, say that tenants can only be evicted for certain just causes. They can't be evicted just because the landlord wants to get a higher paying tenant in. Passing or supporting a right to counsel program, which provides free legal representation to lower income tenants facing evictions. Again, these are all locally passed or funded programs. Inclusionary zoning is another important policy where cities say that when new housing is built, a certain percentage of the units have to be affordable, sold or rented at affordable prices. So that ensures, especially in gentrifying communities when there's often new market rate housing being built, that some of those units are preserved as affordable for the longtime residents of those communities. That we would argue putting some preferences on those inclusionary units to ensure that they go to families who are at risk of displacement from that neighborhood. We can also ensure that the Community Reinvestment Act is being adhered to by banks to ensure that they're equitably investing in all of the neighborhoods in their service area. That often falls to local advocates to ensure that banks are providing loans and bank branches and loan officers and small business lending in lower income communities, not just the more affluent communities in their service areas. We can ensure that we're creating homeownership opportunities in gentrifying and lower income communities through like community land trusts, for example, and I'll get into that example more in a moment. We can also provide property tax relief for lower income homeowners in gentrifying communities who are seeing rapid increases in their property taxes because of the increasing property values because of gentrification. Sometimes they can't keep up with those rising property tax bills, and that's one way they're displaced from the neighborhood. So some communities are passing property tax relief programs to provide some relief to those lower income homeowners in gentrifying areas. So those are some place-based and anti-displacement strategies. We also talk about mobility strategies. These are strategies concerned with opening up exclusive, expensive, often predominantly white communities to more diverse residents. So desegregating the suburbs, equally as important as place-based strategies. Some ways to do this, first and foremost, is to change the zoning in these areas. Most suburbs are zoned only to allow one home per lot, which ensures that the homes in those neighborhoods remain unaffordable to only the most affluent people can afford those homes, because as demand increases, you can't build more homes to meet the demand. And so the homes just become more expensive. Single family only zoning has been one main way segregation has been maintained. So in order to start to desegregate these areas, we need to start by allowing a more broader range of housing sizes and types and affordability options to be built in all neighborhoods, including suburban neighborhoods. We can also provide subsidies for families who've historically been excluded from these suburban areas. Homeownership subsidies, down payment assistance, rental subsidies, etc. We can also ensure that as we're building more housing to meet the current, housing affordability crisis that the country is in, that we're building truly mixed income housing that includes subsidized units for low-income families, market rate units, and units for middle-income families, what's called the missing middle. And we should be building developments that are integrated, not segregated developments as we're trying to integrate communities. So sometimes that takes some local funding support to help to subsidize those middle income housing. We can also ensure that the Housing Choice Voucher or Section 8 program is a better opportunity for mobility. And I know you've been talking about that already. So I'll mention that a little more in a minute as well. And then, so those are place-based and mobility strategies. And then we also talk about strategies that reduce the obstacles to home ownership for African Americans in every neighborhood. So we want to, address the issue that keeps African Americans from being able to access home ownership, partly because of this wealth gap due to lack of intergenerational wealth because of past government policies. So providing down payment assistance programs, home ownership counseling, reforming the credit scoring system, which is a racially discriminatory system, even though it's racially neutral in its design or in its intent, it has a racially discriminatory impact. We can also ensure we're subsidizing the construction of homes for home ownership so that they are affordable to middle income and lower income families. And ensuring, that we're building and providing enough starter homes for first-time home buyers in our communities. And then, getting African Americans into home ownership, extremely important for addressing the wealth gap. But that alone won't close the wealth gap entirely, because there are a lot of ways that the wealth building potential for Black homeowners is limited when compared to white homeowners. So we want to address those obstacles to wealth building as well. This includes addressing discrimination in mortgage and credit underwriting, addressing bias in the appraisal system, addressing disparities in the property tax assessment systems, and addressing, rising property taxes in gentrifying areas, the loss of homes due to tax debts. These are all ways that African Americans they experience this more than white homeowners across the country, and limits their wealth building ability through their homeownership experience. Another important one is ensuring that all homeowners, but especially Black homeowners or first-time homeowners, have estate plans or wills in place when they buy their home to ensure that that home is passed down according to their wishes, and the wealth of that home ownership experience is passed down to future generations. Without a will or estate plan, there are ways that investors and speculators can get that, kind of steal that wealth from the family. So those are sort of the main categories, and I'm going to use the rest of my time to just go into detail on a couple of those. So the first I want to talk more about is the community land trust example. So this is a fabulous tool in the toolkit for addressing all of these issues. Community land trusts, they have dual goals of maintaining affordable housing as prices are rising in a community, and providing home ownership opportunities to lower and moderate income homeowners who otherwise wouldn't be able to afford homes in that community. There's over 300 communities around the country that have a land trust. I know that there are several in Michigan. I'm not sure that there are any in Flint, but I might be wrong. I didn't see any in my initial look, but they're growing and expanding, and many communities are starting land trusts all the time because it's a great way of meeting the need for affordable home ownership opportunities. So it's a big goal to achieve for a nonprofit organization. How does a community land trust do that? Well, first it acquires property, and then it fixes or builds homes on those properties and sells the homes at affordable prices to a lower or moderate income family. And in the sale of that home, the land trust maintains ownership of the land underneath the house and just sells the home. So the rising cost of land is one of the primary drivers of the rising cost of housing. So when you take the land out of the equation, the house is more affordable. That's how they could sell the home at an affordable price. Then the homeowners own the home like every other homeowner. And they agree, they pay their taxes and insurance and mortgage. And when they agree that when they want to resell the home, they adhere to a maximum resale price that's determined by the land trust using an equation. Every land trust does it slightly differently, but that equation usually allows the resale price to rise somewhat so that the home seller earns some equity in the sale of the home, but it's a limited equity arrangement. So they're not earning as much equity as if they sold it for market prices, because in return, they ensure that that home is affordable to the next home buying family. So this is the only way virtually without putting new subsidy in the home at every resale, that the home is affordable in perpetuity. So it's affordable every time it's resold. It's a great model for getting lower moderate income families into home ownership who otherwise wouldn't be able to afford it. They build up some equity. Often when they sell their land trust home, they have enough equity earned, they can buy another home in that community, and then it's affordable to the next family. And I'm not really following the chat questions, but I see the land trust and land bank question. A land trust and a land bank are not the same thing, but they sometimes work together. A land bank is often a public or public-private partnership that kind of banks the land that local government owns or foreclosed homes. So they're like holding on to that land. A land trust is a nonprofit organization. It's not a governmental organization, but a land bank can donate land to a land trust. And often that is how a land trust acquires more property. So we wrote about the land trust in Durham, North Carolina. It was started when a group of neighbors just started talking to each other about what they could do to improve conditions in their neighborhood. This was a lower income, predominantly African American neighborhood that was near Duke University, or is still near Duke University. And they, the first thing that they talked about wanting to do was getting a park in their neighborhood. They didn't have a park and kids were playing in the street. It was dangerous. So they advocated that the city build a park on a vacant lot. They won, they got the park, and that got them galvanized. And they were interested, what else can we do to improve conditions here? Their neighborhood was gentrifying because Duke University was expanding. Investors were buying up homes. They wanted to do something about that. So they learned about the land trust example. And they started by acquiring 2 vacant homes. They actually crowdfunded to buy those homes. They got donations from people in the neighborhood. They bought those 2 vacant properties. They fixed up the homes. The first buyers paid about $100,000 in today's money. Lower moderate income families got into home ownership. The homes in the land trust portfolio now sell for about $150,000. So you could see how that equation allows the home price to rise somewhat so the home sellers can build up some equity. But the other homes in the neighborhood today sell for more than $500,000. So they've maintained a lot of affordability. They've also prevented a lot of displacement in the neighborhood by providing more affordable housing opportunities as housing prices were rising. The land trust now has over 300 properties all over Durham. They have for rentals and for sale properties. They've been around for 30 or so years, so they've had a lot of time under their belt. But again, they started with 2 properties. It starts small and then builds. So land trust example is a great model we can use. And if your community doesn't have a land trust, you can look into starting one or supporting one that already exists. And again, the most important piece once a land trust is established is to ensure that it can acquire more property to increase its portfolio. And the one way to do that is to advocate that local government use their vacant or unused public lands or foreclosed homes or lands in their land bank to help a land trust increase its portfolio. Now, local governments, many of them can do this, but they need some advocacy from their voters and residents to push them to use their vacant land in this way. So this is one way that a local group can help support these efforts by pressuring local government to use unused, vacant land. Sometimes there's school sites that are no longer being used. Local governments sometimes are sitting on large pieces of land. We wrote about some that, had acquired an unused golf course or an unused country club or a small airport that is being decommissioned. These are local governments with huge pieces of land. And some of that can be donated to a land trust. But it takes local advocates to push that along. And yes, a great resource to help start a community land trust is called Grounded Solutions. Grounded Solutions. And if I have time, I'll stick that in the chat once I'm done talking. But they're sort of like the technical assistance provider. They have toolkits and resources on their website for starting a land trust. They have a lot of information on their site. So that's one example of a strategy. Another, I mentioned the Section 8 program. I know you've been hearing a lot about that. The Section 8 program, is a rental subsidy program. It had the promise when it was first established to provide the opportunity for lower income tenants to move to higher opportunity areas or higher cost areas if they desired, because the voucher is mobile. As you all know, discrimination keeps many voucher holders from being able to use their vouchers, especially in higher cost areas. Source of income discrimination laws like Michigan's that just went into effect, extremely important. I don't want to reiterate more of what was said just prior to me, but I will just reiterate that source of income protection laws, extremely important to get on the books, and then enforcing them even more important. So supporting paired testing programs, volunteering as a paired tester, to ensure that those laws are adhered to is also essential for helping the voucher program live up to its promise to be a tool for mobility for lower income tenants. One lesser known piece of the voucher program, again, the voucher program, the Section 8 voucher program, funded by the federal government, administered by local public housing authorities. So there's actually a lot that we can advocate for on the local level with our local housing authorities to change how the program is administered so that it is a more effective tool for mobility. So not only source of income discrimination ordinances, we can look at how the administrative hurdles to landlords participating in the program, how the maximum rent amount is set. There's a lot of things under the local housing authorities' purview that can be reformed or changed or looked at that can help make the program a better tool for mobility. One other piece of the Section 8 program that fewer people tend to know about is that Section 8 vouchers can be used towards homeownership. So we think of it as a rental subsidy program, which it is, but housing authorities are allowed to use some of their vouchers to be a subsidy for home ownership. So instead of that voucher going towards the rent, it goes towards the mortgage. It works the same way, but that family then is, on the path, or they're in a home that they're paying off and they have more stability, creates more wealth for that family. It's a great option, but many public housing authorities don't offer that option. And one of the reasons is that they name is that they don't have the staff. Their Section 8 staff is familiar with the rental market. They're not familiar with the home ownership market. So they just don't think that they have the administrative ability to administer a home ownership program. But some do. Cincinnati is one that does. Oakland, California has a home ownership option. So this is another thing we can advocate with our local housing authority to use some vouchers to allow them to go towards home ownership. It takes, again, advocating with the local housing authority to get on board, ensuring voucher holders know about it, and then working, and this is essential, working with local lenders to ensure that there are mortgages available to voucher holders, that they understand how the program works and are willing to underwrite that kind of mortgage. So that's another thing we can do locally to help advance these efforts to challenge segregation. Another piece which I mentioned briefly earlier has to do with property tax issues. So this is a way that we can ensure that the home ownership experience for Black homeowners is a good tool for building wealth for those families. So, one way of addressing this is through or one obstacle to wealth building that Black homeowners face uniquely is bias in the appraisal system, the property appraisal system. And so there's efforts underway to address bias where Black homeowners who are trying to refinance or sell their homes, their property gets appraised at a lower value if the appraiser knows the race of the homeowners versus if they think the homeowners are white. There's a lot of anecdotal evidence of this around the country. There's some efforts to address this. Biden started a task force. I believe Trump has dismantled it, but there have been some efforts and advances in this around the country. So that's the appraisal system. There's also the property tax assessment system, which is different, but also has racial disparities built into it. So I'll get into it. Bear with me. I'll get into the weeds a little bit about this, but across the country, on average, Black homeowners are overpaying in property taxes relative to white homeowners when you hold the value of their homes constant. So how it should be in a jurisdiction, and again, property taxes are administered or the property tax system is run by local county tax assessors. And what the county does is it establishes a tax rate. So it's 1%. The whole county pays a 1% tax rate applied to the assessed value of their home. So people's property tax bills vary because the assessed values of their homes vary, not because the property tax rate that they're paying varies. So the assessed value of their home should be as close to the market value of their home as possible. Now, the problem is you can't know what the market value of a home is unless it's sold that year. So the county tax assessor has to assess what they think the market value of the home is. And that assessed value should be as close to the market value as possible. But what happens is often the county tax assessor does a countywide assessment of all of the property values in the county and then doesn't do a proper reassessment. There's often issues with that first assessment to begin with, but then they often don't do reassessments, not only every year, but every few years or every decade. We looked at many cities around the country or counties who hadn't done reassessments for 40, 50 years. So in that time that they're not doing a proper reassessment, what they do is every year they adjust all of the assessed values in the county by the same set percentage. So they say, we think this year was a good year for property values, so we're going to raise all of the assessed values by 0.5%. Or we think this year was a bad year for property values, we're going to decrease all of the assessed values by 1%. So all of the assessed values go up or down at the same rate. But in reality, what happens to actual values of homes is in the time that all of the home assessed values are going up and down at the same rate, in white communities, homes are increasing in value a lot faster than those set factors, those set adjustment factors, while homes in Black communities are not increasing in value at that same rate, or sometimes they're decreasing in value. So they're not keeping up with the set adjustment factors in the same way. So the result is that homes in Black communities are often assessed at above their market value, which means they're overpaying in property taxes, while homes in white communities are assessed at below their market value, which means they're underpaying in property taxes. So on average around the country, Black homeowners are paying 10 to 13% higher property taxes than whites when you keep the home values constant. Now, this is a racial disparity that, should not exist. Everybody should be paying the same rate relative to the values of their homes, but it is not happening. In Genesee County, from 2012 to 2023, the most expensive homes were assessed at 42.9% of their value, so below their market value. And the least expensive homes were assessed at 61.5% of their value, which is almost 1.5 times the rate of the most expensive homes. So this, again, is consistent all over the country. There's a website that a researcher at the University of Chicago, it's called the University of Chicago Property Tax Project, has a site you can put in your county, and it'll give you these very detailed reports about the property tax disparities in your county. Again, this is an example of a racially neutral policy that has a racially disparate impact. It's a local issue controlled by local tax assessors. So a local group can collect data on this disparity, advocate that the assessment system is reformed to more accurately assess the values of homes, especially those in Black neighborhoods. Philadelphia is doing this now. It's an effort spearheaded by Philadelphia's mayor, that they're looking into all of the aspects of the assessment system to try to weed out where the disparities come from. A local group can also help homeowners look at their property tax bills. Most people don't know if they're overpaying or underpaying because they only see their own property tax bill. They don't see other people's. So we can help folks understand if they feel like they're overpaying. They can appeal their assessments, have their property tax bills adjusted. Often homeowners need some assistance with this. We can also advocate for repaying Black homeowners who've been unfairly overpaying in their share of property taxes for years. That's sort of a future goal I would put out there. But first, we need to find where this disparity is existing and try to get rid of it. So there are other consequences to just overpaying in property taxes. When you're overpaying in property taxes, you can't build up wealth as quickly because your output and your bills is higher. But there's another, worse consequence. So when your property tax bills are rising or you're overpaying to begin with, this is especially an issue for lower moderate income families or elderly homeowners on a fixed income. Sometimes you miss a tax payment. And this can lead to, even for very small amounts of unpaid taxes, can lead to a foreclosure and to losing all of the equity that you've built in that home. Now, this often happens to elderly homeowners who've paid off their mortgages. They might miss a tax bill because those tax bills are no longer, part of the mortgage bill. And it might be a very small amount, under $1,000 of unpaid taxes, that can then lead to a lien being placed on the house. That tax lien is then sold at an auction. And often the corporations who buy the ability to collect that tax from the homeowner at the auction, they buy these tax liens, then they can foreclose on the homes. And then they own them, and sometimes they don't maintain them, sometimes they rent them out, sometimes they don't. It can turn into blight in the neighborhood or poorly maintained rental stock. So every county does this differently. We can look at how our county runs this tax lien auction system to ensure more fairness in the system and try to, keep investors out of this system. And there's ways to do that we describe in the book. But an important piece of this is that when investors who buy these tax liens at auction and then foreclose on the homes, those homeowners should receive what's called the surplus equity that is a result of that auction price. So usually the auction price is more than the taxes owed. So the government will get the taxes owed. And the surplus equity, the amount that the auction winner pays above the taxes owed, should go back to the homeowner because they have built up equity in that home. The home is sold, should pay off their debts, and then they should get the rest. There's been a Supreme Court case recently that says it's unconstitutional not to provide that surplus equity to the homeowner, but it's up to states to ensure that it's happening. And in Michigan, while the state allows homeowners to collect this surplus equity, they have to go through a very onerous process to claim the equity, and most can't successfully navigate that process. So in 2022, there were 196 tax foreclosed properties in the state of Michigan that sold for more than what was owed, but only 9 of those 196 homeowners were able to claim that surplus equity. So this is another way that a local group can help homeowners who are caught up in this tax lien foreclosure process to advocate that they get the equity that they're owed when the investor pays more than the amount owed in their taxes to buy their home. We can also work on reforming the system so that it doesn't lead to a missed tax payment doesn't lead to a foreclosure and a loss of a family's home. We can also help those homeowners who are behind in taxes apply for deferrals and exemptions that they're eligible for to try to keep them out of this foreclosure process to begin with. So that's another example of something we can work on. And I have 2 minutes left, so I'm gonna put in one more example. And this has to do with the credit scoring system. So I mentioned this earlier. This is another system that is racially neutral on its face, but has a racially disparate impact. So the credit scoring system we think of as objective. It's a rating based on your financial history of how well that system thinks you are, what kind of borrower you are, and how likely it is you will repay future debts based on how well you've paid your past debts. So it makes some kind of sense. But the reason why it has a racially discriminatory outcome is because it only takes into account a certain type of financial history, what's called traditional financial instruments, bank loans, car loans, mortgages, credit cards. If you have that kind of financial history and you've paid off those kinds of debts faithfully, you'll have a high credit score, you'll have access to a mortgage, maybe even get a lower interest rate because of your high score. If you don't have access to those kinds of traditional financial instruments, say you live in a segregated Black community that doesn't have any physical bank branches, harder to get a bank loan, might be harder to get a credit card loan, or a credit card or a car loan. And so you rely on what exists in your community, which is more likely to be, say, a payday lender. Those payday lenders charge exorbitant interest rates, terrible terms. You might pay that off in full on time. That, to me, seems like a good indication of what a good borrower you are. But because it's not a traditional financial instrument, it doesn't get fed into the credit scoring system. So that financial history doesn't help you in your credit score. Similarly, if you haven't owned a home in the past, but you've been a renter your whole life and paid your rent on time, even though rents go up every year and mortgages don't. So if you can keep up with your rents and pay your rent on time for 30 years or however many years, I think that's a good indication of being a good borrower. But rental payment history doesn't get factored into the credit scoring system either. So as a result, we have a system that only factors in the kind of financial history that whites are more likely to have than African Americans. So whites are more likely to have a credit score to begin with, and then of those that have credit scores are more likely to have a credit score high enough to be eligible for a mortgage. And again, this isn't because of the quality, individual quality of the borrowers. This is because of how the system is created and how the algorithm works. And so, while the credit scoring systems are national systems and there is some reform happening on the national level to start to count rental payment history, for example, in the meantime, we can work with our local financial institutions, local bank branches, credit unions, to start to factor rental payment history into their own credit scoring algorithms when they're doing their mortgage underwriting. And we wrote about several local bank branches and credit unions that are doing that. And that goes a long way towards opening up credit access and mortgage access, especially for African American first-time homebuyers. So an essential piece of, reducing the barriers to home ownership that exist. So those are a few examples of what we can do in our own communities to start to challenge segregation and remedy its ongoing impacts. Again, there's many more in our book, Just Action, many more we couldn't even fit into the book, many more I'm hearing about every day from communities around the country. And, for every example we give in the book, we write about a community that's successfully implementing that strategy because we want to show not only is there a lot we can do, there's a lot that is being done. And we don't often hear about what local groups are doing in their own city councils or planning commissions. But it's important that we hear that there is traction and movement around this, even today in communities around the country, looking to address these issues in their own localities. And we can do the same in our own community. So however we start in our own community will be different because every community is slightly different, but there's so much that we can do and we have so far to go that we just need to get started somewhere. So I hope this gives some ideas and inspiration for taking on these issues. And thanks so much for your attention. And we have some time for questions, I believe.
Yes, I will turn it over to Alex.
Thank you, Leah. You've answered a few questions in the chat as they popped up, and we thank you for that. We'll start with, how do you see the role of the Community Reinvestment Act evolving in advancing fair housing? And what changes would you recommend to ensure it more effectively addresses racial and economic disparities in access to credit and home ownership?
Yeah, that's a great question. So the Community Reinvestment Act was established to challenge the practice of, or remedy the practice of redlining by banks, where banks were not offering mortgages in communities of color or lower income communities. And so the Community Reinvestment Act requires that banks equitably invest in all of the neighborhoods in their service area. They get a score, a community reinvestment score on how well they're doing that. Now, the system itself, the scoring system is not great, so most banks get passing scores, and we know most banks aren't doing this very well. So it often falls to local advocates to ensure that banks are living up to these obligations. When a bank applies with federal regulators to merge or acquire another bank, this is where advocates have their greatest leverage in the Community Reinvestment Act process. When they want to acquire or merge with another bank, they need federal regulatory approval. And local advocates can hold up that approval process if banks aren't living up to their Community Reinvestment Act requirements. Banks don't like being held up in those processes. They don't like the bad press they get. And so they often then agree to community benefits agreements to increase their investments in those neighborhoods in return for those advocates' support of their merger or acquisition. So it's sort of a backdoor way of using the Community Reinvestment Act, but it's been very effective. Now, the Community Reinvestment Act itself, it was established to remedy the practice of redlining, which was a race-based practice, but the Community Reinvestment Act itself is race neutral. It says, the scoring is based on how well banks invest in lower and moderate income communities, and it doesn't name race as a factor for what banks should be paying attention to in terms of equitably, lending, mortgage lending, small business lending, investments, bank branches. So that's one reform that should be adopted. Now, the Community Reinvestment Act was just recently updated with some changes that, while it failed to get the race specific language in it, there were still some changes that were important and helpful, and those are being rolled back by the current administration. So I think it, the way to make it a better tool for remedying racial segregation is to make it a more race conscious act. But we have a few steps before we can get to that, which is just protecting what it already can do.
Thank you, Leah. Even where source of income discrimination is prohibited, and this includes Michigan as of April 2nd, enforcement can be weak, and many voucher holders still struggle to secure housing. What are some best practices in your research you've identified for ensuring enforcement of these protections, and how can our communities hold housing providers accountable to emerging fair housing rules?
Yeah, I think the best tool I know of is paired testing programs, identifying where the discrimination is occurring and then prosecuting to the extent the local law allows when discrimination does occur. And those examples can then, help other property owners and landlords understand that there are consequences to discriminating, and so they might not want to do that themselves. But you need some test cases, you need some proof that it's happening, education, publicity about that, and that education is not just for landlords, but for tenants as well, to understand how they might know they might be being discriminated against, so that they can then seek recourse as well.
We have many test coordinators and fair housing program administrators in this audience, so we really appreciate that answer in particular. With the current backlash you mentioned against racial justice initiatives and changes in programs such as affirmative action, how do you recommend activists sustain momentum and then build broad-based support for desegregation efforts and fair housing rights in the year 2025?
Yeah, it's a challenging time, to say the least. I won't pretend that that's not true. And I, speak around the country about how to do this, and I am not hopeful every day. So I'll just say that. But I do think it's important that we keep going. These are setbacks, and there have always been setbacks in, the march towards civil rights and equity. These might seem worse than others, but they're certainly the worst in my lifetime. But that doesn't mean that we should give up, because the need is still there, and the future before us is long. It's going to last beyond the next 4 years. So we have to keep going. And the way I maintain hope is staying informed about what local communities are doing, and this was true even before the current administration took office. It still felt overwhelming and impossible to make some of these gains in this country around racial equity or housing justice. And as the more I learned about what local communities are doing around the country, the more hope I have and had, because there are communities working on these issues and having successes in red states, in blue states, and purple states, that they are making advances. And we tend not to hear about those smaller victories from local communities, which is why we wrote about them in Just Action and have written more about them in our Substack column, because I think it's important to remember that there's other communities working on this, and it's possible to make advances even while there's, more roadblocks being put in our way on the federal level. There's a lot we can do today on the local level. And there's a lot of opportunity today also that didn't exist a few years ago. The whole country is now feeling an affordable housing crisis. So that sort of opens up the audience that's amenable to listening and talking about solutions to housing issues. As more people are feeling the pain of not being able to afford housing, there's more opportunity to sort of build a broader tent towards addressing housing affordability issues. And as we address housing affordability issues, we should also be addressing housing equity issues at the same time. So it sort of opens up an opportunity to be able to do that. Like, for example, the zoning issue I talked about. There's a lot of communities, states, local communities looking to reform their single family only zoning because they understand how single family only zoning is one of the main reasons we're in an affordable housing crisis to begin with. So we have to change that zoning to allow more housing types to be built. Now, there are people from across the political spectrum that agree with that. You know, they agree with the sort of supply demand issue, or they might agree with rezoning efforts because it's a property rights issue. So there's a lot of ways to build support that might seem less obvious, but we can get folks, you know, who might not agree with us on everything we're talking about racial equity, but agree with us about how to address the housing affordability issue. And then together we can, you know, those issues sort of overlap and we can start to make some gains that way.
Jennifer asks, how can we educate our communities to help empower them? What do you recommend, or what general information will help empower people?
I mean, so I really do think that understanding how we got here is empowering to understanding how we get out of it. It's a history that is unpleasant to dig into and to hear about, and you know, it's hard to confront. But once we confront that history, I think it is empowering, because once we no longer think that this is just some accident or magical occurrence or just the way our country will always be, once you understand that this was an intentional creation to ensure that our communities are racially segregated, then we can start to see that, oh, if intentional action created it, intentional action can undo it. So I think a great way to start to empower people is to start to understand that history. Some communities have done that by starting to inventory the racially restrictive covenants that exist in their neighborhoods. There's a, I'm not going to remember the website, but I think racial restrictive covenants, if you search racially restrictive covenants, there's a website. It's kind of a clearinghouse that has all of the local groups that are working on inventorying these covenants. Some communities then take that information and pass ordinances to remove the racially restrictive language from the covenants. We advocate not completely removing it, because if we erase that history, there's less sort of understanding of how we got here, less motivation to do something about it. Instead, some communities are, you know, stapling statements on top of the restrictive language, saying we don't adhere to the values in this covenant. But anyway, in starting to inventory those to understand them is one first step. Reading The Color of Law, if you're a reader and want to really dig into it. There's also a film that was made from The Color of Law called Segregated by Design, which you can find online and watch for free. It's like 17 minutes. And it explains pretty quickly. It's a lot of information, but it explains the history, and then you can kind of start to figure out which piece of that history you want to unpack to start to learn about, and then figure out what you can do about it locally. So that, to me, I think is empowering.
Thank you, Leah. I think that may be all the time we have for questions. I'll check with Trish to see. We could maybe fit in one more. I will note now, so Just Action, How to Challenge Segregation, enacted under the color of law. It's available to buy now wherever books are sold. We've added a link in the chat in several places. It's also on Audible, where Leah and Richard Rothstein both read each chapter, alternating. And that's a very nice way to do it, especially if you're driving to work. And you can hear from Leah's voice again. So you can also subscribe to Leah's Substack. That's justaction.substack.com. That'll be more up to date and have it's updated quite frequently. I'm a subscriber now, and you can be too.
Great, thank you. And I just dropped the Segregated by Design website in the chat. And yeah, our website, justactionbook.org, has all of our appearances as well as where to buy the book and other information. And you can find me through links on that site on LinkedIn, or reach out to me there if you have additional questions or want to tell me about something great you're working on.
Well, thank
I
you,
like
Leah.
Thank you so much.
I like your attitude, Leah. It's interesting. I also like Alex's attitude because after he knew he was going to be fielding questions, he listened to your whole entire book on tape
Oh, wow.
and was prepared very much for it. I bought the book and I'm not quite through it yet. But the thing that I like about your presentation is I've been doing this for many, 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 many years. And yes, we need to know the historical setup and why we're segregated the way they are. But today, your presentation was so refreshing to know that there are solutions. So I really appreciate you taking the time to being part of our conference. And the other thing is that today we will be doing, for anybody that puts in their evaluation within the next 24 hours, they will be put in a raffle to receive 10 of the books that we're going to give
All
away.
right.
And so definitely I'm a supporter of both books. And again, I really appreciate your time and your support for our Fair Housing Month project for the conference. So thank you so much.
Thank you so much for having me.
Yeah. All right. For everyone in the room, your feedback is extremely important because we're going to be having another conference and we don't know if it's going to be on-site or virtual. We'll see what your opinion is. And I'd love to have people from California, Tennessee. I mean, we have people from all over across the United States today. And again, many of them are fair housing centers. And so please fill out your evaluation. And we would definitely want to thank everyone for attending and making it a very successful. And again, a thank you to all of our presenters today. Another thing I liked about all the presenters, it was very down to earth, not difficult to understand. And so the last message that I have for the audience is whenever I do a presentation, I always say to my audience, okay, now you have a responsibility. You are part of this whole project. You are now the messengers. You're the listeners and the messengers. So when you hear someone that may have a situation that may be fair housing related, it's your responsibility to at least guide them to a fair housing center. And so we can help you. We can investigate the cases. We can help you file complaints. We can do systemic investigations. So I put some of the burden on you now, and it's a positive burden because I know we all want to change the ways of the community. So thank you everyone for attending. And would someone put in the link for the evaluation? And you guys have a good rest of the day. Thank you.
Thank you, Trish, and the rest of the team. It was very informative and a morning well spent. Your hard work paid off, and hopefully you can sigh with relief now.
I did.